is the motherfucking intro. I'm just trying to get that money like 1-0-0-0-0-0-0-0-0-0. I'm here with Gino.
Hey, danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game. I'm a player. Feeling like Pac. Represent. On my block. Try to knock me down, but I come up on top. Yeah, they wanna see me flop. Got a plot, want a lot. I won't stop on my pops. Got so many flows, it's insane. They don't really understand the game. Got a plan and it's plain, I ain't playing. I'm just trying to gain. I wanna get that big bag, need that D-Rex. Blow up Tic Tac with a blue cheese at. I don't give a fuck about your feedback. Eat that, get back, sit back, watch me spit that kickback. Got so many flows, yeah, they think that I'm insane. Ghetto kids in a lot of pain, all about the bills, ain't shit changed. Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game, I'm a player. If you a hater, I don't hate you. I'm just really happy that I ain't you. I just wanna thank you. You kept me motivated, so now I motivate you. There's a lot of cake, money on my mind like a banker. Coming through with them bangers, ain't no room for mistakes. Lot of stake, hustle till we get a lot of rooms, lot of stakes. Good kid, but I keep it gangsta. All gas, no brakes. Got cash for the case. More cash in the case. More cash in the safe. More cash on the way. Hustling all day. Ay. Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game. I'm a player.
Danger, coming with them bangers. Where my fucking paper.
Money dance, deposits hit. Charge print checks and we pop champagne quick. Money dance, wrist too lit. If the market move, we get paid off it. Money dance, bags advance. Private terminal, leather seat stands. Cash in the safe, bank wires in hands. We don't pray for wins, we command the chance. Jet lounge quiet, warbling glass. iPad glowing, I'm watching the NASDAQ. Charge skill print, I'm wild boarding the flight. Volatility, funding the life I design. Rich and Millie catching sun through the shade. Risk costs more than they salary made. They spreading pump, I'm fading the move. Then I short the top while they chasing the news. Money in the accounts, money in the safe. Money in motion, stacking by the day. If the candle shake, I don't feel a thing. I increase size when the fear hits the screen. We don't chase hype, we execute plays. We don't need luck, we operate with edge. They need green just to feel okay. I get paid when the structure breaks. Money bags, deposits hit. Charge print checks, only pop champagne quick. Money bags, wish too lit. If the market move, we get paid off fee. Money bags, bags of vast. Private terminal, leather seat stash. Cash in the safe, bank wires in hands. We don't pray for wins, we demand the task. Money dash when me alert go off. Wire clears before the jet takes off. My wires cost what they owe in debt. Profit alerts, louder than flex. Fear hit charts, I increase size. Weak hands fold, I monetize. I don't guess, I position. Luxury funded by precision. Cash sleep heavy in hidden safes. Numbers long in multiple states. Volatility pays my flights. Discipline built this life. Money dash. Money dash.
Said I'm taking big shots, just stop. Where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. pissed off. Thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop, way I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. They been trying to get me cheap like a thrift shop, but I told them it's my time, shit the wristwatch. They been talking way before they even doing something. Whoa. If they wanna play, let's get a tip off. Ain't no silver lining, dawg, this some rose gold. Getting new money, I'm a old soul. Yeah, I get it bouncing like a pogo. Whoa. And I'm too cold like Frozone. And my chick elastic, girl. Told them we ain't in the fake and this ain't plastic, girl. Bought a new whip and cash, now my taxi thorough. Way I'm shooting like step, but my pass is bro. The way I'm playing the field, I'm in a league of my own. And now they all in they fields, I got them all on my phone. But dog, I'm hitting the climb, I got no time on the low. Way I'm shooting is messy, the way I'm hitting the goals. I'm taking big shots, just stop. Way I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop, way I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. I just left, but you know I'm coming back though. Whoa. And you know I don't play by my rags though. Now go and turn it up to the max, whoa. Send a paper to me now like a fax, whoa. Yeah. Got 2 phones ringing off the hook now. When I'm in the city, I get looks now. I was going bad, but I'm...
Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Ayy, on the road, here we go, here we go. Yeah, we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command like. Yeah, you about to see me on demand like. You know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Hey, on the road, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah, you know, yeah. Maxed out, put the pedal to the floor. Yeah, on the road, here we go, here we go. Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah you know, yeah. Maxed out, put the pedal to the floor. Yeah, on the roll, here we go, here we go. Here we go. On the road, here we go, here we go.
What is going on, everybody? Welcome back to the Frankie Candles live stream. Bitcoin getting another drop to the downside. If you guys tuned into the live stream last night, you will know we were looking at that 786 daily underneath us, and although not the biggest, most important level on the higher time frames, was an area to look for a bounce, and I guess you can consider this a nice little bounce to the upside from that key level. We're going to take a look at the lower time frames as well as what I'm overall expecting. As you guys know, I have been preferring a continuation to the downside, not just this move, but continually down towards the low at about $60,000. Are we headed there? Are we still looking for those lows? Could the bottom be in? We're going to cover it on today's live stream. We'll also cover the hyper local levels, and I don't know, maybe we'll see some live price action here if Bitcoin doesn't want to continue going sideways. So shout out to the Mafia. Welcome in. We got Kodak in the chat. We got Rudy with 2 eyes in the chat. Welcome in. We were talking about you yesterday, Rudy. We were They're like, hey, we haven't seen Rudy with the eyes in a while. I think all Rudys have eyes, but only a couple of them have two. Shout out to Rudy. Welcome in, bro. We got Wayne Mack in the chat. Brillo, Self-Wealth, Crypto, H-Bar to the moon. OCB, what is going on? We got Tony D and Jesse and Darren Does Things holding down the chat today. Thank you guys for being here. I appreciate you guys. Big Huggy saying, Bing Bong, smash that like button for the best sauce around. Shout out to Big Huggies. And who was it? We had, where is it? Shout out to Ligma Wick. Guys, if you're going to pull your wick out in public, don't Ligma Wick in public. But he says he caught a long position, stop loss to break even. Shout out to Ligma Wick. Let's go, baby. That's what we're talking about. Stop loss to break even, protecting those gains. I don't know if you took profit already, but at least putting yourself in a risk-free trade there. I absolutely love it. Let's see. We got Perry in the chat, says, hey, yo, Frankie, salute. They've removed the music from Spotify, the CandleMafia song. Shout out to Perry. I think I have to re-download it. I do have it. Shout out to Rudy with a Y for making that. But yeah, shout out to Perry. I don't know. That's not my song. Otherwise, I would re-upload it. But shout out to Chris Mello. Welcome in. Said, Frankie is my sweet little... Shout out to Christian Mello. I don't even know what that means, so I'm not going to say it. I'm not. It looks like Spanish there, but shout out to Christian Mello. Welcome in. Always with the out of pocket comments. We love you, bro. Welcome in. Let's see. Shout out to Bled. Says any discount for the premium. Shout out to Bled. We do run discounts from time to time. We usually run a huge discount on Cyber Monday and Black Friday. So we're kind of coming off the back end of those. Sometimes we drop a random little like 10 one-time use discount codes, but I don't believe there's a discount right now. Kodak says it's cheap enough. Shout out to Kodak. Yeah, it is. It's not super expensive, but stay tuned. We do drop those links sometimes. So, guys, without further ado, Oliver says, "Hold my hand, Frankie." Well, we're gonna walk you guys through this price action. Hopefully, give you a clear view on where we think price is going next. And we're bouncing off the daily right now. Let's see. Are we gonna wake up tomorrow at that value area low? Let's go ahead and jump on into the charts. Let's get into it. Shout out to Derelict dropping the calf emoji, bro. That leg emoji is just hilarious. Just a straight right angle. No lie, guys. I swear I do not make this up. I know the calf thing is a joke. I saw you guys on Jason Casper's tweet. He was talking about one of his 2026 goals was to get bigger calves. I saw you guys in the replies there. But yeah, I swear, guys, my entire life, I've always had my calves commented on. I don't work them out specifically, I guess. It's just genetics. But last haircut that I got, the barber was like blowing the hair off like my legs and stuff. And he goes, wow, bro. He like barely speaks English. He was like, wow, bro. Wow, big leg. You can't make it up. I can't escape the calf comments, guys. But anyway, this is not a fitness stream. Let's go ahead and jump on into the charts here. So obviously, guys, I'll just break down kind of how we got to where we are right now. Obviously, kind of talking about overall, guys, like not a ton of like really, really good support underneath us when we pull up our current volume profile. Of course, we look at this through the typical volume profile kind of theory, deviate above the highs, tried to break out, couldn't do it, back to the POC. As we lose that POC, obviously, we do look for that higher probability to get that move down to the value area low of the range, right? Just statistically, based off the volume profiles, and this has kind of been my bias forever here, just really preferring to come down and take out this low, or at least, I don't know, maybe we get a double bottom or something, at least get a fill of this volume profile. But as you guys know, these volume profiles don't always fill beautifully, right? We get the bounce off the low, we go straight back up to the high, and then we kind of just chopped around here. But over time, obviously, the statistical higher probability is that we do eventually get a move back down to this value area low. And I'm going to talk on the lower time frames about the level that we're bouncing off of right now. I'll bring that up in a second. And potentially like how high we can look for this to go. But, you know, my overall bias here within the larger volume profile, of course, remains the same. The volume profiles will change your life, guys. I know, like, it gets really, really choppy. I've been spending a lot of times on the lower time frames with you guys, and people are like, should I take a long here? You know, oh my God, it's bouncing. Is this the bottom? And I always try to, like, let people know, right? Like, you know, could you take a long here? Obviously, yes. I actually took a long here as well. We got the confirmations, but of course, not only in this specific like local scenario, but for overall here, obviously, you know, we are in a bear market, right? In a bear market, you want to be more greedy with the shorts and more conservative with the longs, which of course I am absolutely doing. As I am still holding my shorts here from $98,000 and also about $91,000, almost like $90,000, right? So I am still holding these short positions, got massive profits locked in, still have massive profits unrealized. I don't know if I'm still logged into the exchanges. See if I can pull these up. Yeah, I am. So here, we got one over here on Blowfin, still up about 12,300. Got a bunch of profits locked in there as well. And then same situation here on WeX, almost up the same amount, like 13 grand. So still just kind of holding these, right? Like I don't really see a reason to close these in the long term. Obviously, we're in a bear market. My entries are all the way, my stop loss for this is at break even, but this is all the way at the previous like larger, higher time frame, lower high. So if I did have to close these, I would have to end up closing them on a sign of strength, which obviously, yes, I will make less profits, but obviously that is going to be the risk to reward there based on, I am anticipating lower prices eventually. So I'm okay kind of holding these positions, waiting for that drop to the downside. But just simply volume profile, right? Statistical higher probability down here. We also have no high time frame confirmation. And that is kind of what we've been talking about recently is, in previous bear markets, we've seen, very often very nice bottom confirmations. Now, I don't mean bottom confirmation as like a signal to buy, right? It's just to give you a signal that the bottom is likely in, right? Back here was the weekly bullish divergence. Of course, I was not waiting for that to form to buy in. I was already dollar cost averaging in. But, when we talk about this, right, we looked at 2015. There was no real significant bullish divergence, all right? We kind of just bottomed out on the capitulation, and then we kind of just came into like accumulation. We swept the low locally, right? And then we just wound up coming up and then seeing those signs of strength eventually. I don't know how this is going to play out, right? I think everybody's kind of just sitting here trying to figure out like what exactly that's going to look like. Obviously, I don't know. I do have my preference of a lower low coming in. It would just make it a lot easier to be like, hey, this actually looks like a strong bottom, because although this could be the bottom, right? Which, it's not my preference, but who knows? Anything can happen. If this is the bottom, right, there's no way to really be like, oh, my God, there's a really clear sign on the chart that this is the bottom. I tend to lean the other way, right? Number one, I want to see those confirmations. Number two, right, we still have pretty early weekly money flow crossover into the red. Typically, this does spend a good amount of time in the red. Obviously, we spent a good amount of time down there. Now, again, right, it's kind of early in the money flow where you do pretty much put the bottom in, right? We made one more low after this, but at that point, right, you're not looking for this red money flow wave to absolutely capitulate you down to massive levels. And I want to bring up a new level, not a new level, but a level I don't really mention very often that has been very consistent throughout the previous cycles that we have actually bottomed out at. Actually, every single cycle has bottomed out in or around this level. So I'll bring that up in a minute. But, obviously we go back to some of the other cycles, right? Like weekly money flow does tend to spend a bit of time in the red, right? It's never, we don't really have a situation where it's just like you're in the red and then right back into the green. But here's 2015 where you get the capitulation low and then you kind of just never revisit that low. This is, again, even back here, obviously I wasn't even in crypto at this point. It definitely didn't have my channel. But, here, right, I would be thinking to myself like, okay, like, sure, I understand that could be the bottom, right? But I don't really have any strong confirmation here. There's no massive bullish divergences. But then in 2017, we got the daily bull div. And then in 2022, we got the weekly bull div, right? So when I say I'm looking for a bottom confirmation, I'm not looking for that to be the signal where I buy, right? It's more of just like same thing here, right? Like I'm not looking at this bearish divergence as like, oh my God, that's the bearish divergence I want to sell, right? I did take some profits here, and then eventually we saw that bearish divergence. We identified the signs of weakness, took more profit, right? And then we wound up seeing that big drop down that we wanted. So I want to be very clear about that when I bring up these like bottom signals. I know the word signal is kind of like a word that everybody's like, oh my God, signal. But that's not really what I mean by that, right? Really what I mean is like, it just gives us an idea that the bottom could be in. We just don't have that right now, so I can't say it, right? But at the same time, right, like no guarantees that the bottom's not in. Again, I lean more the other way, that we have more downside ahead of us. But I do think that if we do get that next capitulation down, we are much further away from like starting the bear market, right? And much closer to something where it's going to be kind of one more last drop to the downside, and then, you're much better off looking for bottoms. I do think like a majority of this drop is behind us, hopefully, right? And I'm going to talk about those levels, those bigger levels that I'm looking at in just a second. But overall, right, weekly money flow still in the red. We come on over here to the 4-day, right? 4-day money flow still coming out pretty aggressively. Yeah, you got a little bit of an exaggerated bull div there, but again, I don't like these big legs. I like to see these form a little bit more locally to each other, but overall, money flow still in the red. This would make you anticipate, right, not only that you're in a bear market, but money flow would also indicate that pops to the upside would likely be faded for lower prices, right? 3-day, Come on, money flow still in the red, also looking to print a red dot, and we did just eventually, I believe yesterday or maybe earlier today, we started printing this 2-day red dot. And now when we come on over to the daily, right, this is kind of one of the big things we've been looking at, because it's not just the fact that I want to take out this low, it's also the fact that when we look at our horizontal levels here, the biggest levels of support, right, underneath us, there's nothing really big here, right? Of course, we have the 786, which I'll bring up in a minute, right? Which is, of course, where we're bouncing from right now. So the level that we looked at yesterday. You have the golden pocket. We melted right through it. I did get stopped out of my long for a loss. I said I would say that if that happened. So that is the case there. Again, every long here has been taken with, like, really low expectations, right? And I've been in a really cushy position, guys, to be honest. Like, I've mentioned this many a times. If I didn't have the YouTube channel, if I didn't have the Discord or anything like that, like, I'd probably just be sitting in my profits in the shorts and kind of sitting out of this garbage price action. But at the end of the day, all these long positions were taken with, like, low expectations. We're in a bear market. You got to be conservative. We won a couple scalps. I got stopped out of a couple of scalps. But the as we come down here, right, like, this is really the only level we have underneath us, which, of course, is a golden pocket 786, which the only reason I'm even a little bit not interested, but, like, the only reason I'm even looking at this level is because, you know, if you are, right, this is obviously a level where you can get a bounce. I'll hide this, and I'm also going to talk about, you know, my preference here, because if I am going to be anticipating lower prices to come, to take out that low, to eventually print this daily bullish divergence, which would be a much nicer confirmation in my opinion. Can't guarantee it's going to come in, but that's what I would like to see. But, you know, with the golden pocket 786 here, you know, we don't have a lot of confluence, right? It's not like we have all the money flow coming to the upside, right? 4-hour money flow is still technically coming out. We have no bullish divergences. So I'm looking at these as very local levels. But at the end of the day, technically, this golden pocket 786 would typically be a place where we're looking for a low, a high, a higher low, and potentially a higher high. Now, not all Fibonacci retracements are created equal, because, of course, if I wanted to see this as a high probability, right, not that it's impossible to just come up out of nowhere, but to see this as a high probability lower high for a higher high, higher low for a higher high, I would really want to see all the money flow kind of headed in the right direction, right? 4-hour money flow is coming out locally, right? Like, none of this money flow, even the 5-hour, although we were trending up, is coming back down, making a new low. We don't have everything kind of all trending in the right direction. And between multiple time frames, you want to see things forming like rolling on top of each other like dominoes, right? You have the 0 line here, right? Maybe your 30-minute is crossing over the 0 line, right? Then your 45-minute is going to be about to cross the 0 line. Then your 1 hour is going to be starting to curl up. Then maybe your 4-hour is starting to bottom out, right? So you want these things to kind of follow each other, right? If that makes sense. Like dominoes, right? It's the best way I can explain it. We just don't really have that, right? Like, this money flow is super choppy. We looked at this yesterday. Even like the 2-hour money flow, super, super choppy. We came up here right back into the red. And one thing I do want to bring up as well is when we're in a bear market environment, money flow does tend to spend a lot more time in the red than the green, which is why I say you want to be greedy with the shorts, conservative with the longs. And I was actually kind of looking at this price action right here, which does seem somewhat similar to maybe where we're at. I don't know if we're like somewhere here or somewhere here. Either way, of course, right? A lot of the drop has already happened. But when we look at like the 10-hour here, it's like, oh my God, we have a 10-hour money flow crossover. Like, this is super bullish, right? 10 hours is a pretty high time frame. And at face value, if you don't understand the environment that you're trading in, which is a bear market environment, you would see this 10-hour money flow crossover as a massive, massive signal for a, overall continuation of a 10-hour uptrend, which could be pretty big. But in a bear market, right, you just kind of fake out into the green, back into the red. Oh, we're going back in the green. And then you're just back into the red for just a continuation of the environment that you're in, which, of course, is a bear market context. So, even if we do start to see those money flow crossovers, I just don't really know if we're in the environment to see those play out in a super, super big way. So I wish we had all the confluence, like, oh my God, this is super, super beautiful. And when it does look like that, I like to say that, right? But it's just super choppy. But at the end of the day, this is a golden pocket 786. We also had the daily down here. This is, of course, the level that we were looking at underneath the golden pocket. These were the only two levels. These are the only two levels that we had underneath us until we get down to that bigger level of support, which I prefer, which is sitting all the way down here, right? High time frame, low time frame, right? So, of course, you can get little bounces here. You can, of course, scalp those moves. But at the end of the day, right, there's not a ton underneath us. You also have that value area low sitting down here, which does tend to act as a magnet. And, when you just take a broad look on the higher time frames, right, like, there's just nothing other than these two local levels. There's nothing there until we get here, right? So, I wouldn't be surprised if we get a little bit of a continuation of a bounce. I'm going to bring up those levels of resistance where I would be interested in lower highs and then a lower low to come in. And of course, as we've covered many a times, just so everyone's kind of ready, if we do get that low to come in, one of the big things I'll be looking at on the higher time frames is, of course, going to be that daily bullish divergence, right? Which does look like it could be setting up here on the chart, which would mean, right, maybe we get a bounce around, right? If we do come down again, we could put that lower low into our key level of support with a potential higher low on our momentum waves, which would eventually give us an actual signal that, maybe at least, right? I'm not going to say that a daily bull div is definitely going to mark the bottom, but we'd at least have something to say here that if we wind up getting a good reaction from this level, we start coming around and playing in here, it's like, okay, can we see a continuation up? At this point, right, we'll have this value area here. And at that point, we can say, well, hey, guys, we came into major support. We have massive bullish confirmation. And, this is a much better scenario, or I shouldn't say better, but a much clearer signal to say that, hey, this looks like we could potentially see a much bigger continuation up, especially if we wind up seeing that daily money flow start to curve back up. Right? It's very similar to the situation we were in back here. We had a bunch of kind of wonky signals. We had bullish divergences here on the daily, but money flow was still coming out. And then eventually we ended up, and we also had our key level of support down here, which we did not tap at the time. I actually don't think it was this. I believe it was, no, I think it was this. Right? We hit the golden pocket. We got the bounce. Money flow was in the red. So what do? We anticipate lower highs, lower lows. We put in a little daily bullish divergence here. As you can see, we look for a bounce, right? But this bullish divergence is not going to be treated the same as when money flow is coming up. Money flow is still coming out. Sure, the daily bull div gives you a bounce, but you're going to be conservative with that, looking for another lower low to come in, which ended up being the case. We front ran the key level of support. We had money flow coming out, indicating the trend would continue down. And then at that point, we can then say to ourselves, we hit the key level, we have a nice bullish confirmation, and money flow starts trending back to the upside, indicating not only could we get a bounce here, but as you start to come up, look at your money flow on the daily. It starts to come back up, indicating that the larger trend will continue to the upside, right? So if we're able to come back down into this key level of support, which we have front ran, we can get that bullish divergence, and we start to see that money flow cross into the green. These are going to be some of the things I'll be looking at to anticipate not only a bigger bounce, but also potential continuation. Now, I don't know if that money flow is going to be coming up as we get that bull div, right? If we get that bull div. But if it is, right, that's what I'll be looking for. Just giving you guys kind of the forward plans, right? So if you never watch this live stream again, you'll actually know what we're looking for. And in my opinion, right, if we do get into that situation, it's going to be very likely that that trend, if money flow is coming into the green, will very likely continue to the upside. And that would just be a much clearer view to look for a bigger move up, right? And then at that point, we could start to question, hey, maybe that was the bottom. And if not, right, we'll probably have pretty clear views on the charts saying, hey, this is nice. We do have money flow coming out, but because of X, Y, and Z, we are still looking for lower highs and lower lows. Because I know a lot of people are looking for 30K. And this is where I want to come up to the higher time frames and talk to you guys about some of the newer levels that I'm, not newer, but some of the levels we haven't really discussed a lot that do have a lot of, I guess, confluence, you can call it, right? So if we come on here to the historical chart, I'm just going to pull it from this low, right? Obviously, not a lot of information back there, but from the low to the high, right? Where's the bottom come in? It comes right in on that golden pocket. Golden pocket 786, Fibonacci retracement, right? Let's pull it from the bear market of 2015 to the high of 2017. 786, golden pocket, retracement. That's where you get the bottom, right? Well, check it. Pull from the bottom of 2018 to the top of 2021, where we bottom out between the golden pocket and the 786. And we pull it from the bottom of 2022 to our current high of 126K, where those levels sit, right? I'll take these off the chart. Well, look at that. We're approaching the golden pocket. And it's not to say that again, I do think it's a dangerous way to view the market to say, well, if we get a nice bottom signal here, right, it doesn't matter. We have to go down to the 786 because it happened in the past. Remember, what else were people saying that with? 50-week moving average, right? We have to go back to the 50-week moving average. We have to go back to the 50-week moving average. Sure, it would make sense. It's happened in every other cycle, right? But pretty much every other cycle, except for 2015, right? I guess you could argue, I guess you kind of got a little front run retest here, but we never made it all the way back up there. Whoops. So when we look at this, right, this would be the first kind of big area. Golden pocket, obviously. We have all those weekly, daily, weekly MPOC, monthly MPOC, weekly horizontal level leading down to about 55K. Pretty weird, right? It's really between, we have 58K. I don't know exactly which level is which, but we have the 58K level, the 55K level, and then I believe we have another one right down here, right? So we have a lot of confluence in this level. It's the start of the big zone where we typically look, or not typically look, but typically have had the bottoms come in, right? So when we kind of look at like worst case scenario, not only do we have the 39K level here, but what else do we have at 39K, guys? 37K, right? We have a monthly MPOC. So I'll just kind of mark that out right underneath there, right? So you also have a little confluence on the 786. So this is like a really big zone, to be honest, right? And again, 47, why am I even interested in potentially not having to go down to the 786? Well, if we're going to look at the idea of the diminished losses, right? Maybe we kind of play around with this golden pocket, bounce off the POC at 47K, that's another level we have down here. There's a lot of confluence on support here. And then at that point, right, it's like maybe someone brought up yesterday, I forget what move, I think it was the 50 and the 200 moving average, 3-day moving average. Typically when they cross, you get a big drop to the downside, which we back tested. It's 100% true. And that is about to happen if we get one more dump to the downside. This is really the first major big zone. If we end up losing the 47K POC, where are we looking? 37K weekly MPOC, which is hilariously enough very close to that 786, and then the level underneath that is about $30,000. So, again, we talk about these kind of two major scenarios we can look at for this bear market, which is either kind of the better case where you get the diminished losses, which has happened cycle to cycle, right? So from here to say, if we go down to that 47K POC, it's about 62%. It's a pretty aggressive diminished loss, right? Like these have been pretty, back here, I think it was like 88%, right? I'm not wick to wick here. I think this was 88%. This was more like 83%. And then 2021 was like 77%, I believe. So, between, I would say, this would be kind of the earliest 62%, right, between these in this zone, right? And then if we wanted to go for a little bit more of a traditional move for the 4-year cycle, right, coming down to this level would give us about a 70% correction. Like these are huge levels. And why do I bring this up? It's because at this point, right, if we come in here and we start to see those bottom signals, now I don't know if the bottom is here or if the bottom is going to be lower towards 30 to 37K. I do not know. Nobody knows. Let me tell you this. Nobody knows that. No matter how confident they sound, it does not matter. Nobody knows this. But what we can do is identify if you're actually, look at the charts as the price action develops. If we see this move in here, right, and we see these confirmations, it will start to look clear if we start coming back up. Hey, weekly money flows coming back up. We have nice weekly bullish divergences. At that point, right, I am no longer going to be looking at these as a target. Not every target needs to get hit, right? And the only way to kind of understand if that target is still in the cards is if you get those confirmations, right? And of course, the loss of that 47K POC would very greatly increase the chances that that worst case scenario will play out, right? So kind of better case scenario would be like an early bottom coming in somewhere here, right? With the, in my opinion, very small chance that maybe the bottom's in. I don't really lean that way. And then worst case, right, lose the 47K POC. We could start looking down to, I would say, about 37 to 30K. But with this golden pocket 786, again, like it's inarguable that every other cycle has bottomed right on that 786, right on that 786. And then here we kind of played around with it a little bit. So if we lose that 47K POC, I'll tell you what, we come down here, guys, I might start selling some stuff. And I don't mean Bitcoin. I mean selling, I might sell the Supra and then buy a bunch of Bitcoin. I'm just kidding. I won't have to do that, luckily. But just to kind of get, worst case scenario, right? And then if we get down there, right, maybe maybe it goes to zero. Who knows? But, just to kind of give you guys a long-term view here of what we're looking for. I really do like the support down here. And either way, whether the bottom comes in there or not, from a trading perspective, right, we have the confluence. If we get that daily bull div with low time frame confirmations, I am interested in potential swing trades just from a leverage perspective, even if we have to roll back over and come lower. So we had that level yesterday. We're bouncing off it right now. If we come up, I want to talk about those levels of resistance I'll be looking at because, of course, we're in a bear market. You do want to pay attention to the resistance for lower highs and lower lows. I'll cover that with you guys in just a second. I will come into the chat for a minute and see what you guys are thinking. But, yeah, let's see. After we lose the 200 week, it's very hard It's very hard to above this fast. Never happened till now. Shout out to Philip. I'm not 100% sure exactly what you mean by that, but we have looked at the 200-week moving average, which, of course, kind of similar, right? What happened there? Oh, there we go. Kind of similar, right? We have the 100-week, the 200-week, and the 50-week. Right, obviously, 50-week being kind of the thing to indicate that you're going to start a bigger downtrend. And then I'll actually take the 50-week off. But the 100-week, you lose that, you get your big capitulation. And then the bottom typically comes in somewhere around that 200-week, right? And if I come over to Bitstamp, because I'm going to need a little more price history, right? I kind of brought this up to put things into perspective for you guys. You know, again, not looking for the level to mark where exactly the bottom will come in, but just in general, right? We don't have a lot of information here, but if we kind of just, you know, pretend that that was like that, right? Probably was, you know, right around that, you dip a little bit below it, you get back above, you flip the 100-week bull market. 200-week literally wound up being the tick low in 2018, right? You get back above the 100-week. You know, who knows what this would have looked like without the black swan? I would assume probably without the black swan, right? We probably wouldn't have had to deal with that. And we probably would have either came up sooner or we would have kind of just wiggled sideways and saw the same thing play out. Either way, 200-week, not a bad time to buy Bitcoin. 200-week, not a bad time to buy Bitcoin. And then in 2021, 200-week, not a bad time to buy Bitcoin, right? Even if you bought it right here. Remember, long-term view. You're not going to be worried when you're sitting up here in massive profit. You're not going to be worried about whether you bought here or here or here. You're just going to look back and be like, hey, I caught the bottom. And this is all confluent with the weekly money flow crossover, which is kind of the simplest way that I tell people. I've been saying this since I started my channel, going into the 2022 bear market. What am I going to be looking for to accumulate Bitcoin? My average entry price was around $21,000, right? And am I pissed off that I didn't get it at 15K? No. Why? Because I didn't know if we were definitely going down to 15K, right? You don't have to know 100% exactly where price is going to go. Not only do you not have to know, you're not going to know, right? So what do we look for there, right? The very simple thing was wait for the weekly money flow crossover, the first big capitulation down. That is typically the time to buy Bitcoin. Historically, if you were buying Bitcoin when price action or money flow was in the red on the weekly, you were getting very good prices, right? You were essentially buying the bear market for a massive run up into another bull market, right? Every cycle, right? And this all lines up with the 200-week moving average as well. So just to kind of have a view of like where we are overall, right? Of course, I would not be surprised if we come down and test this, right? I wouldn't even be surprised maybe if we get down below it a little bit. But at the end of the day, you know, what is this? 45K, right? Like, even if we get down below it, it is not the time to walk away from crypto. It's not the time to come back next time, right? It's the time to pay attention. It's the time to, this is why I say 2026, bottom watch, all right? I kind of want to start shifting things, which I'm going to have to fight against the crowd a lot. We fight the bulls at the top, and we fight the bears at the bottom. We did it back here, fought the bulls up here, fought the bears down here. The charts wound up being right. We fought the bulls up here. The bears wound up being right. And it's not about being right or wrong, right? It's just about going with the higher probability outcome. It's not about, I was right, I predicted this. Not at all, right? It's about going with the higher probability outcome and making money, right? So if we get the dip below here, just understand, right? Like, usually not a bad place to start dollar cost averaging into Bitcoin, whether it's here or you want to wait for the next drop. Again, you know, dollar cost average is the way. A weighted dollar cost average is my preferred method, right? Lighter portions of your portfolio, you dip, heavier portions of your capital, right? And then, you know, at the end of the day, I have a long-term view on Bitcoin. I am not really worried about Bitcoin long-term. If it keeps dipping, I keep buying. My entry price keeps going down. It was the same exact thing here. And guess what? It wound up working very, very, very well. Not telling you to do that, right? This is not financial advice. I'm not telling you to buy Bitcoin. I'm just telling you guys what I do and what has happened in the past, right? And it has worked out for me. So we'll see, right? 200-week moving average also underneath us. One thing that we have never done is not touch the 200-week, right? So again, does that mean you have to touch the 200-week? No. But is that a higher probability? Probably, right? 65 to 66K and 69 to 70K are my current SFP levels. I like 66.5 the most at the moment. Fib retracement from 66.7 to the low we put in today. Plus, it's the value area low of the previous range. Yeah, shout out to Runners for Nerds. I do want to talk about that. Let's jump down to the lower time frames here and talk about the biggest key levels above us, right? Because we do have a few of them. We kind of talked about this a little bit yesterday. Let me go ahead and pull that folder up that we literally drew yesterday. Come on. So here's the volume profile above, right? And yes, look at that. Beautiful push into the 786 daily. bullish divergences. Of course, I was not really interested in this level, but we do get the bounce, right? You get the bull divs, push into the level. Of course, you get the little bounce, right? If this does continue up, the biggest level I'm interested in personally is when we take a look at the liquidation heat maps right here, right? Sitting at about, right above $68,000, we have a decent amount of liquidity, right? We marked off this box yesterday with you guys, that liquidity box, right above about 68K. We also have the POC of the range. We also have a golden pocket. We also have the anchored VWAP pulled from this major lower high, right? Before the big dump down. So you have pretty good confluence here, right? This is going to be the next area that I would be, I'm not really in a rush to really take new shorts, right? Because I'm already covered with my bigger shorts from higher. If I don't get that trade, I just don't care, right? Because I'm already in a position where I'm going to capitalize on the move down anyway. But I understand not everybody's in that position, as I mentioned yesterday. So, if I were not in shorts, the biggest area I would be interested in before we get up to the daily MPOC that we've covered at 72, 650, 641 would be here, right? If we're just going to continue lower highs and lower lows, let's say we get the continued bounce here, we flip this tap daily MPOC, we get to the value area low. This is also, shout out to Runners for Nerds, I think said this. This value area low is also an interesting level to me. But I would say up here, not only do we have the daily MPOC, the golden pocket, the point of control, the range, the anchored VWAP, we also have a weekly MPOC as well, right? So you have a high time frame level in there on top of the lower time frame MPOC, the golden pocket, the POC, the liquidity, and the anchored VWAP. So one thing I will be looking for here is if we can get this move, key level number one is always going to be the value area low. This is technically your doorway to higher prices, right? Higher prices just really meaning the point of control, as that would be the next high probability target, right? Just looking at this as a volume profile, get back into the value area low. Next place for price to likely go is going to be that point of control. Now, you do have to be careful here because of that liquidity sitting here, right? That liquidity sitting up here could mean that you could get a pretty fast wick up above that level. But that does not mean that you can't get SFPs. It doesn't mean that you can't get another rejection down below the level. So if we get back up here and we cannot hold these MPOCs, point of control, golden pocket, maybe we come up and wick the highs, I would be interested. This would definitely be the first place to look for a lower high before another lower low coming in, if we don't do it sooner, right? Of course, you have local levels in here you can reject as well. Again, I'm already short from 98K and 91K, so I'm already covered on that. But if we get a lower high, this would be kind of the first place to look for. This golden pocket, actually, this golden pocket is pulled from the lower high here to the low. Whoa, hey, hold up. There you go, right? Still the same zone, just moves it down a little bit. But this is kind of the biggest level to look at in my opinion, right? Wick above there, you have the 786s back up at about 69K. I'm not going to give a setup or anything, but this is definitely going to be a place that we'll be interested in the premium Discord, right? We'll be looking for specific confirmations to see if we're going to get that lower high for another lower low to come in, right? And that's, of course, if we don't come down from here. I prefer, just because I'm sitting in the shorts, just send it down. Send it down. Don't make me wait through all this. But that is going to be a big zone to look at. This starts at about, call it 67.6 all the way up to the, technically the 786 would be the invalidation of that lower high, sitting at about 69K. And if you wanted to just pull this from the high of the range, you could see, right, like that same zone, right? It's really that same zone. The 786 kind of sits up here towards 69K. The full golden pocket sits dang near 69K. So, I'll just give you a broad zone here, sitting between 67.6 and call it 69K, right? And again, to be as specific as possible, with that liquidity that we just looked at, sitting above 68K, what do we know about liquidity? Number one, it acts as a magnet for price. The closer we get there, the stronger the magnet, right? It would make a lot of sense to me if we came up there to sweep out that liquidity before coming down. Now, number two, not only do we know it acts as a magnet for price, but we also know once you push into this liquidity, those shorts are going to get stopped out, right? When you get stopped out or liquidated out of a short, it creates a market buy, which is why you see those big wicks, right? That's why SFPs are a thing, right? You stop out the shorts, creates market buys, big wick up, and then you get the acceptance back below, and you get the push down. So what that would obviously look like here would be, just be careful. Once you push into that liquidity, you might be able to see a wick come up, right? So the key there is to either look for the SFP, or you could just kind of wait for the reaction and then get back down below that POC, right? That's definitely going to be an area that I'm interested in. I don't know if I'll take a trade. It depends on if I'm on the charts or not. If I miss it, I just don't care because I have the shorts from higher. But that's really the biggest level that I'm interested in. And then once we get above there, you got the value area high, which again, maybe the liquidation wick pushes you into that, right? Wick into the 786 value area high, right? And then you get the move back down. right? We're getting really specific here now. Maybe that creates a bearish divergence into the value area high, which is, of course, a confirmation to get back down to the low. I don't want to cover too much sauce here, but and then once we get above there, I'm really just waiting for 72,641. Right? Because once you start pushing above these highs, you're probably going to start some more liquidations, and then your next resistance really sits up there. So that's going to be major zone of interest for me personally to the upside, and then to the downside, of course, my biggest area of interest would be taking out the low here at 60K. Now, as Perry said, there is confluence locally here on the value area low. I wouldn't say it's as strong as this level with the weekly MPOC and the daily MPOC, but if you pull your fib, from the lower high to the lower low. You got the golden pocket 786s here as well. Again, not as much confluence, right? We don't have daily MPOCs. We don't have weekly MPOCs. We don't have the point of control. We don't have the anchored VWAP. I actually do believe we have an anchored VWAP there. It's just not as significant of an anchored VWAP. Might be from this lower high. Yeah, I mean, this is also an honorable mention level, right? But I'm not here to give you guys, like, what is this? Like, whatever, $3,000 zone to look for a short. But at the end of the day, this is big resistance. For me personally, right, I just kind of look at the local resistance, right? If we get up there, if there's no signals, right, I'm just going to be like, that makes sense, right? We'll just come up to the bigger level. So just keep in mind, right? And at the end of the day, right, value area low is always going to be key resistance until proven otherwise, like down here, right? If you can't get above this level, right, you're not going to go to the POC. Once you get above that level and hold it, very likely you go to the POC, just like back here, right? Come into the value area low, you hold it, POC, right? Very high probability of rotation. So that value area low sits at about 66,394. POC sits at almost 68K. Yeah, call it 68K, 67,966. And then your value area high sits at 741. But my biggest area of interest is 100% going to be right here, right? Honorable mention. And then up here, honorable mention depending on, how we approach it. If we get above this zone, right, we start holding this as support, and then we come up with no confirmation, right? I'm not as interested in that level. You do have a daily MPOC up there, though. Just simple volume profile stuff. I am always interested in looking at shorts at the highs, longs at the lows. Whether you get the full rotation or not, that is typically where I'm looking for longs, where I'm looking for shorts, right? So technically, I can't really say. If we get up here, I'll probably look for shorts. I just don't, from a level perspective, this is much stronger. So I wouldn't be surprised if you wind up getting a rejection from the POC. So locally, that is what I'm going to be looking for. That's the biggest key level above. And yeah, getting the bounce from the daily MPOC we looked at yesterday, not super shocking. And again, right, you get those nice bullish divergences down here. Again, I'm not interested in really any of this. But little bull div, even if you came down from where you are right now, look at this, right? 3.6% move, plenty of room to make a little bit of money on a scalp. Importance of knowing where the key levels are. Even if you are expecting more downside, just like every other long on this way down. Here, not super confident on this long, right? But of course, from a scalp perspective, it was very high probability for at least a move up, not necessarily a big move up. But obviously, we took that scalp. I personally got stopped out at a loss, but I just wasn't on the charts over the weekend. Otherwise, I probably would have had profits locked in there. But you got to view these, right? Conservative with the longs, greedy with the shorts, right? Conservative with the longs, greedy with the shorts. Conservative with the longs, greedy with the shorts. Conservative with the longs, greedy with the shorts, right? Let's see. One more low, in my opinion. Shout out to N4. I agree with you, bro. That is exactly what I prefer. Let's see. Solana. Yeah, we'll take a look at Solana and Ethereum in just a second. Shout out to Iron. Said, I want to jump in the Discord. About to join. Shout out to Iron. Let's go, baby. Welcome. Well, I don't think you joined yet. Not a signals group. Disclaimer. Not a signals group. Why don't you have a signals group, Frankie? Because they don't work, right? If signals group worked, I say this every day. If signals groups worked, I would have never learned how to trade, right? I would have just joined the signals group, set up a bot, and printed billions and billions of dollars by doing nothing. What I do in my Discord is I obviously spoon feed you my trade setups that I'm looking for. Actually, we have the folder right here. If I unclick it, you'll see all the trades that we're waiting for. But what I do is I set the trades up, right? I show you my personal trade setups and the confirmations that I like to see to enter those trades. I also give you key zones, right? Like I personally wasn't interested in a long here, but this, of course, was an area we were looking at in the Discord, even if I don't take the trade, right? But the setups are trades that I'm actually interested in usually taking. I have the spoon-fed trade setups with the confirmations I like to see. I do not tell you exactly when to buy, exactly when to sell. Sometimes if I'm in the Discord, I'll be like, hey, guys, I jumped in the long. Sometimes I'm not there. Sometimes I'm driving with Mrs. Candles, and I'm like, Mrs. Candles, hold the wheel. trying to enter on my phone. But not a signals group. We do 2 live streams a week. I actually teach you how to be a self-sustainable trader, right? I teach you how to fish. I teach you how to fish. I give you the best equipment, and I literally like point to the hole and tell you how to jiggle your rod. Pause. I tell you how to wiggle the bait. We're master baiters in the Discord. I'll just say that. I just teach you exactly what I look for. So you can, like, in the Discord, we have people that literally are like, I might not be interested in a trade. I shout out to, I forgot who said it. They took along. I'm not sure if they're in the premium Discord, but a lot of people will be like, hey, I saw the level. I saw the confirmations Frankie likes to see. I took a trade. It wasn't even a trade I was looking for. And they're actually feeding themselves off of what they learn in the Discord. If you want to learn how to actually trade and actually make money trading, that's what my Discord is for. I'm not going to give you signals. I'm not going to tell you exactly when to buy, when to sell. Oh my God, buy now, sell now, right? At that point, I'm in and out of my trade and profit. By the time I'm able to get that in the Discord, price has moved. People are getting out at losses. I'm not there to wreck my audience, right? I'm there to actually teach you how to change your life and show you how to learn this skill of trading so you can eventually quit your job. And then one day, when I decide to retire and hop on SpaceX and go to Mars and move there full time, and I don't have internet access, at least Earth internet access, you could still make money trading. But anyway, let's see. Shout out to Nerd Jessica. Oh, you didn't share the did I not share the chart? Oh God, I gotta share that chart real quick. Shout out to Darren. Thank you for that, bro. Master bait indeed. Yes, it is the best bait you can ever use, which is volume and order flow. It is the best way to look at the market. Volume is price, right? It's not a random pattern. It's not an arbitrary shape that the market has no idea about. It is price. All right, let's take a look at Solana real quick. What causes prices? What causes the price to rise in a downtrend like this? Well, price bounces, right? There's a level, you get the bounce, right? We had another level here, right? Little bounce. Little level here, bounce. Kind of think of it as like a bouncy ball, right? In a downtrend, you don't always just go down in a straight line, right? It's kind of like a bouncy ball. You drop from up here, you hit the floor, you bounce, you bounce, you bounce, you bounce, you bounce, you bounce, you bounce. Bull div, oh my God, millions of dollars to be made. But yeah. Let's see. All right, let's jump into Solana real quick. So yeah, Solana attempting, we're still just playing around with this value area low. At the end of the day, right, at face value, this is not where I look for shorts, right? Obviously, if I was not short from here, here, or here, I missed that dump, right? I'm not interested in shorts. That's just the way that I trade. Doesn't mean price can't go down. I am just never interested in shorts at support, right? Doesn't mean price can't bounce there. Even if I'm expecting it to continue down, I have to wait for a bounce, right? Like here, I'm not interested in a short position. I'm only interested in the shorts on the bounces, right? So just at face value, you're technically at support at the value area low. I don't know if this is going to hold or not. Weekly money flow still in the red, right? So long term, this is still a bearish environment. Any bounces would be looked at, even pretty big ones, right, would be looked at as lackluster bounces for lower highs and lower lows. I'm not saying you have to come all the way down here, but I'm just saying in general, right? Weekly money flow is coming out. That is generally indicative of a continuation of the downtrend. Let's take a look at the 4-day if TradingView wants to cooperate here. 4-day, money flow just still kind of hanging out in the red. No bullish divergences. 3-day money flow tanking, right? VWAP rolling over. It looks exactly like Bitcoin, right? If Bitcoin gets another drop down, the altcoins are going to get another drop down too. That's just how things work. 2-day red dot printing. Of course, if we pull our fib here, we're bouncing off the golden pocket. Bitcoin's bouncing off the 786. But of course, you have local support here. If we pull up our higher time frame levels, pull up the weeklies, the monthlies, right? You had a weekly and a monthly MPOC down here on the first drop. We've already gotten the bounce. So this is the level to hold, right? If you want a continued bounce, I'll tell you what, the line in the sand for me personally would be this 786 at about 72.38. Once you lose that 786, right, because the idea here would be getting a scam call. Low, high, higher low, higher high, right? If you want the continuation up. Once you lose that 786, the higher low is invalidated, and I would be looking to take out the lows, right? Similar to same exact situation on Bitcoin. This is tapped, whoops, tapped. What is that, the POC? Yeah. This is, I believe, tapped. Let me just double check this. Take this off the chart. This is tapped as well. So, I mean, you're at support. Again, this is not where I would look for shorts, right? I would need some kind of significant retracement. But obviously, very bearish environment. Weekly money flow still coming out. We can take a look at the 4-hour real quick. You know, you have no 4-hour bull divs down here. Again, like no real significant confirmations here that you have a strong bottom. You know, we like strong bottoms. You got some 3-hour bull divs here locally. Money flow still coming out. So again, like, you know, you're at support. I would not look for shorts here, personally, even if we nuke down, right? It's just not where I would look for shorts, right? But I would say 72, call it 72.55. You lose this, you can't reclaim it. Like, you have to hold this level in order to have any kind of chance at a new, at least some kind of a bounce, if not a higher high. But again, right, like bear market environment. The bounces, the bull divs are not as strong typically in a bear market as they are in a bull market. And then if you lose this, right, where's the next big levels of support? Just like on Bitcoin, right? Well, you lose that 786, take out the low. Your next key levels of support are down here at about $58. So that's the next major level of support. If you lose this, I'd say very high probability, right? Just based off auction market theory, the market will seek fair value, right? So if we lose those levels down here at 58K, right, you're going to seek out fair value. You have fair value here, right? Impulse. Price does not like to stick around these low volume areas. Fast drop down equals fast move up. We lose this support, could be another fast drop down if we can't hold 58K. $58, sorry. Solana's at 58K, guys. Oh, my God. So there you go. That's my viewpoint on Solana. And again, like a lot of the altcoins, like everything is essentially, like from a sentiment standpoint, going to line up with Bitcoin. Like I don't see a situation where Bitcoin takes out the low and Ethereum and Solana just start mooning. So let's see. Shout out to Kodak, said there's a reason why the best traders in the world use volume profiles. Look at Fabio Valentini. It is the price, where and what happened, who sells, who buys, and where. Yeah, and that goes for, you know, volume profiles, and like some people will just call volume profiles order flow. When I mention order flow, I'm actually talking about a TPO, right, or a footprint chart, right? This gives you like an even more in-depth view of what buyers and sellers are doing. This is why you need to have a, this gives you such a more detail into what price is doing, right? And this is why I like order flow. This is why I like volume as well, right? The volume profiles shows you how much volume is transacted at each price. And then if you look at something like a footprint chart, right, it literally tells you, it's basically a volume profile within your candle, right? This highlighted area is a value area, right? It's like a, I can't draw on this. There's no pen tool, but maybe I can do this, right? Like if I were to take this, right? If this was a volume profile, it would look like this, right? High volume and then lower volume, right? It's just a volume profile within your candlestick, right? And then you even have the POC, which you can't really see it here, but it's highlighted in gold. This was the area in the candle where the most volume was transacted, and then you can see the sells and the buys. You can actually see what is going on here, and there's very specific strategies that we use to find discrepancies in this to identify where price is going to go next, right? You're literally looking at the buys and sells coming in real time from the data pulled from the live exchanges. This is the best way to trade, in my opinion. Whether you're just looking at volume profiles, you know, I would consider that one of the best ways to trade as well. But like this gives you an even more in-depth way to look at the actual buys and sells. I don't know why it's not more popular. I feel like volume profiles have gotten a little more popular over the past couple of years. But I always wondered, like, why do people sleep on volume profiles? Like one of the highest probability ways to look at the market that are out there. I think one of the reasons why it's not as popular is because when you show somebody a chart like this, they're like, wait, I thought it was as easy as drawing a shape on the chart. I thought I just had to look for a shape, and then I knew what price was going to do. And of course, these patterns do play out here and there, and I would say you could be a profitable just pattern trader if you have the right trading plan and the right risk management. But if you really want to understand where the market is going to go, the reason we're able to look at the charts and make these big calls and be right about them way more often than we're wrong about them is because we actually understand what price is doing, where price wants to go. Price seeks fair value. That is just, it's always seeking fair price, right? That's why it's such a high probability when you bounce cheap, expensive, right? It's like a mean reversion trade, right? This is expensive. This is the fairest value, right? This is the highest volume transacted, the strongest magnet within the profile. I try to simplify things, right? Not to like give you guys all these different terms, right? At the end of the day, when you get above inside the value area is fair, right? This is even. Buyers and sellers agree that inside here is fair price. When it gets above it, it's super expensive. I wouldn't say super expensive, but it's expensive relative to the recent price action, right? And then if you know what confirmations to look for up here, you could say to yourself, well, hey, there's a high probability of a rejection. If we get back into the value area, price is going to seek fair value. Where's the next area of the fairest value? It's the POC. This is why, right? And I'll just show you, not only in hindsight, we've literally done this live on like the 1 minute chart, seen the candles push up to these levels, but just as we're here, right? That's why when you get above the low, you're very likely to go to the POC, very likely to go to the high. When you get above the high, especially with confirmations, you're very likely to go to the POC and eventually back down to the low, right? Price, it's an auction, right? The market is an auction. These are failed auctions. Price fails to trade at the higher level, the expensive level. People sell it back down to fair price, right? Price likes to find equilibrium, I guess. Fair price, right? When it comes down here, it's cheap, right? And it's not that you could just long and short above every low and high, right, with the volume profile. This isn't just a range that I drew. This is actually based off the volume. There's a reason this works, right? It's actually how the market moves. You ask like a professional trader what a bull flag is, they'll probably laugh, right? Not to say that you can't make money trading bull flags. You totally can. There's people out there that make a ton of money trading that stuff. But it's not just as easy as seeing whatever it is, right? A flag, a pennant, whatever, and just being like, oh, there you go, right? Again, you can trade these things profitably. But when you start to mix in order flow with those things, there's been many a times on the channel where we'll see a bull pennant, right? And you can actually identify, hey, where are the stop losses? Did we have, like, you don't know what is going on in these candles, right? Was there a lot of people longing at the top here? Because if there's a lot of people longing at the top here, that could indicate something, right? If you get down to the lows, right? Let's say you have a lot of people long in the lows here, all right? Long and long and longing. All those stop losses are going to live down here. What is that? That is liquidity, right? What does price like to do? Price likes to seek out liquidity. So if you have a bull pennant here, you're thinking, hey, breakout, retest, long it, right? Which will happen. I don't know the actual percentages. It will happen sometimes, right? But if you understand there's liquidity sitting down here, you could say to yourself, hey, maybe you get up here, you see some order flow confirmations that buyers are getting absorbed, push down, right? You could say, hey, I'm not going to enter this, right? I'm not going to trade this breakout. I don't like trading breakouts. I like trading traps, right? So I'm more likely to not trade a breakout. I'm more likely to fade a breakout. It's just my way of trading, right? You could trade breakouts. People make money trading breakouts. This is just the way that I do it and why I like to do it this way. When I see that this is unlikely to get a big breakout, maybe we get the breakout on low volume, right? I could say, hey, I'm going to wait for this liquidity to get swept. All these people long in the bull pennant, right, are going to get stopped out. This is where we enter, and then price rips, right? And at the end of the day, the market does not know this is a bull pennant. That's why I view this. What is this actually? It's actually a volume profile. So there you go. A little bit of sauce. All right, let's see here. Let's come back into the chat. Yo, shout out to Jason Casper in the chat. What is going on, brother? Welcome in. He says, happy February 24th, bro. God bless you in this juicy bear market. Also, have you checked out MMT instead of exo charts? I'll never go back. Shout out to Jason, bro. I'll be honest with you. I'm kind of fed up with exo charts, dude. I don't know if it's my computer. I doubt it's my computer. My computer is well capable of handling exo charts. It lags. I have to reload my tabs constantly. I've been saying this to the Mafia in the premium Discord. I am like dying to get off of exo charts. I am a creature of habit, though. So it's really hard. I've tried Addis. I've been playing around with Addis, and it's just like, oh, man, it's just like I like the familiarity. MMT. I'll have to check it out. If you like it, I'll definitely check it out. Actually, is that what Darren Does Things actually recommended one to me as well. I definitely do fight Habit for sure. It's like I tried Addis, and I kind of felt like I was making progress. I was like, I kind of like this, and then I just found myself going back to Exo charts because it was familiar to me. Yeah, I was fed up. That's why I switched, and it's so good. Shout out to Jason. Shout out to Darren. Okay, so that is what Darren brought up. I'll have to check it out, bro. I'll have to check it out. There's a couple of them out there. I mean, Addis was one of them. I think that's like a really popular one. There's another one out there. I forget the name of it. But I'll check it out. I'll definitely check it out. Because, yeah, it's quite annoying, to be honest. I've been fed up with it for a while. I actually feel better that other people are fed up with it. I'm like, I don't know if it's so I guess it's not my computer. Maybe it's Exo charts. They're also like really hard to get in touch with as well. Shout out to Jason Casper. Thanks for hanging out, bro. Appreciate you. Hope you're doing well, man. Shout out to Rudy said, I saw that happen today to a supposed professional trader. He got everybody wiped out because he was doing exactly what you're talking about, trading a pattern. Shout out to Rudy. Yeah, I mean, that's just the thing. It's like we talked about this with the news, right? Like, if you ask me, I don't care what the news is. I just don't. Right? I've never looked back and been like, I should have traded the news, right? I have looked back hundreds of times and gone, wow, that's weird. The news lined up with the last 7 trades that I took. I didn't know the news was coming out, but it helped my move. If, in my opinion, for trading the news, you're too late. Here's the thing. There's someone out there, there's probably tons of people out there, maybe many people, that trade the news and make money. Like I always say, my dad, he doesn't really trade news. I don't know what he trades. He just trades like market sentiment. He kind of just goes, I feel like it's getting greedy. I'm out. He crushes. I would never trade that way. I like to have like binary technical confirmation. That's just me, right? People, there's probably someone out there that trades it, and people who are profitable trading moon phases. I would never recommend trading like that. But that doesn't mean there's people out there that do it and are making money. But yeah, it's again, it's also a very easy way to. It's a very easy thing to learn and then instantly start teaching, right? Like, this is a move up, this is a move down. Then you can just jump on the charts and be like, hey, maybe this will move. It's like something to talk about, something to teach. Beginners are attracted to it because it's very easy. I think the reality of it is a lot of people don't want to understand how difficult trading is and how you really do have to put in the work. There's no way to escape that. I talked about this yesterday. There's no way to escape the hardships of going through learning a really difficult skill. It's infinitely rewarding if you could stick it out, but most people can't do that. Most people just want to believe it's as easy as seeing an indicator light up or seeing, and I use indicators. This is coming from someone who uses an indicator, but I do not use this alone, right? Again, if it was easy, I thought this when I found Market Cipher. I was like, green dot up, red dot down. I'm just going to do that. It sounds good in practice, and even if you look at it from like a higher time frame perspective, it looks good. It looks good. But when you try it in practice, it doesn't work out as well. Now, this is an indicator that I swear by, and I would be lost without, right? Green dot, buy. Boom. Red dot, sell. I made money. Green dot, buy. Red dot, sell. I made a little bit of money, right? It's just not that simple, right? Because you're forgetting about one of the major components of trading, which is psychology and emotion and a plan. If you're just going to buy and sell without learning anything else, right? You're going to buy here. Unless you're just following the indicator, which again, I recommend go try it right on a demo account. It might even work on a demo account because there's no emotion. Put it into a live account. It's very difficult. Trust me, I tried it. I wish it worked because I would have just set a bot up on green and red dots. Is it? Shout out to OCB. Thank you for the super chat, bro. He said, "Hi Frankie, is it possible we reject 64,500?" Definitely. It's possible to reject anywhere. That you have resistance. But again, I don't know what you're looking for a rejection, right? Like I said, like the level I'm interested in is, really taking out $68,000. I can't guarantee we're going to get up there. But at the end of the day, right, if we pull up the chart, let's see. Whoops. What do you say? 64.5, or just where we're at right now. It's a 7-8 golden pocket, 786. I mean, just at face value, sure, you could reject here. It's resistance. Is it a short I'm personally interested in? No. Doesn't mean it won't go down. But again, I don't know exactly what you're looking for here, right? Yeah, I mean, you got a 45-minute red dot printing. This is not a signal. I'm not telling you to take a trade or anything. See the 3-minute money flow. Not really confluent. 5-minute coming out. Yeah, I mean, the answer to the question, can you reject here? Yeah, it's resistance, right? But I'm more interested in looking for, high probability, big confluences. This is just a golden pocket, 786. I could try to see if there's any confluence here. Pull an anchored VWAP from that high. Yeah, you're above the anchored VWAP from the high. Try to pull some kind of profile here. You got some resistance, but I would be inclined, like, if you crack 64.7, you could get above this POC and start heading up towards 65.7. So, yeah, could you reject here? Sure. I mean, do you have bear divs up here at all? Not super clean. Let's check the 15-minute. You got a little 15-minute bear div there. But yeah, at the end of the day, you can reject here. Not really a trade I'd be personally interested in based off my current positioning. But yeah, I mean, you do have resistance there. Hopefully that helps you out, brother. Shout out to Nuke54. Thank you for the super chat. Says, hey, Frank, have you considered allowing people to copy trade you on Blowfriend? I don't think I can legally have people copy trade me. Nor would I mean, even if I could, like, I would not be interested in that, right? It's just I don't know. There's some people out there that do it. I don't think that's legal. I mean, unless you're like a registered, like, professional fund manager or something, maybe you could. I don't know. Maybe should I get certified? Dude, how crazy would that be if I just became a certified financial advisor and we could come up here and be like, financial advice? That might be a first. Maybe I'll look into that. But yeah, no, I just don't do that. Just because of legal implications. Shout out to Jason Casper, said, I haven't shorted in years because I'm always waiting for higher. Haven't longed either because we never came low enough. Thankfully, I'm break even. Shout out to Jason Casper. Let's go. Hey, if you don't enter a trade, we can't lose money, right? Can BTC test 79K and then continue to fall after that? Yeah. I mean, it would depend on what price looked like there. I would probably be inclined. Let me see. Again, like, is it possible, right, is a very predictive mindset. I'm not really in the business of predictions. I'm more in the business of probabilities. Let's see. And it would also depend on, like, when you got up there, right? Let me see. Right, it would rely heavily on, like, what money flow looked like, right? In certain situations, I'd be interested in fading that aggressively, right? In certain situations, I'd be interested in saying, hey, I think the bottom is in. It all depends on what it looks like at that time, right? Or at least, like, leading up to it, right? If we don't come up to 79, if we come down, right, and, like, we're on our way back up, money flow's crossing back into the green, and it's like, oh my God, the bottom's in, right? New bull market, right? At that point, I'm not looking for that to be a lower high. So to be honest, like, I would say that question is kind of just like a, let's roll dice here. Like, let's just kind of, like, make a random prediction. Maybe it plays out. Maybe it's 50-50, right? But 79K, if we came up sooner, right, if we don't take out these lows, if we came up sooner than later, I'd be interested in fading that, right? But again, even if I faded 80K, 79K, right, it's not always going to be that I'm shorting this and then I'm going to wait for it to come down to 50K before I close it, right? It's always going to be kind of viewed as if I get a decent move down, right, and I start playing with the support. It all depends on what the charts look like, right? If the charts look like absolute trash, like here, right, this is a perfect example. When we came down to here, right, I was short. I'm still short from 98 and 91K, right? When I came down here, I was taking profit along the way. But when we came down to 70K, I wasn't like, I'm going to short here and then close this in full, right? I'm taking profit along the way. My stop loss is at break even. And then in here, right, I'm not interested in taking long positions. We said this live, right? We're like, I'm not interested in catching these knives today. I'm just interested in seeing this volume profile fill in full. If the chart looked different at that time as we were coming down here, I may have just, I know looked, I'm not that it was a high probability that it looked like the bottom was coming in here, but if it looked like that, right, I would have a different plan, right? So, is it possible to go up to 79K and then get another lower high? Yes, right? At face value, whoops. Is it possible? Yes. Right. It's a golden pocket 786. If we came up, money flow on the higher time frames was still coming out, right? Lower high, lower low. Possible? Yes, but it really depends on the situation, which a lot of people don't want to hear, right? I'm not saying you don't want to hear this, but a lot of people want to hear that. They just want to hear, like, should I just put a bunch of limit orders there and then make $1 billion on the way down? I was like, I wish it was that easy. Frankie, the financial officer. Shout out to Gen Z. Should we get my dad to be a financial advisor? He just comes in. I'm like, Dad, this isn't financial advice, but tell me what you think. You could say the financial advice. Let's see. I had a Series 7 license back in the day. You could pass the test, Frankie. Shout out to Gary C. Should we do it? That'd be funny. We could, like, vlog. Frankie Candles gets becomes a financial advisor. That's crazy. That's crazy. What are the rules there? Can you just, like, get up? Like, I'm sure you can only talk about certain things. Like, I don't know if, like, coming up here and talking about, like, SFPing the lows into a 786 or, wicking out of the value area and shorting would be a legit thing that you can say as a financial advisor. Fed chair Frankie, cut the rates to 0. Let's go. Negative rates. But yeah, we took a look at Solana. I'm just trying to see if we're, doing anything here. Just kind of wiggling around locally. Just nothing. But we took a look at Solana. Ethereum. We could take a quick look at Solana. Did we already take a look at Solana? We already looked at Solana. We didn't take a look at Ethereum, I don't think, which, of course, is just in the same scenario that we covered yesterday, right? We wicked the 786. That's your key level, right? Eventually, again, I'm anticipating Bitcoin to eventually take the lows, whether we get a bigger retracement or not. I would prefer to see the lows getting taken out, but same thing as Bitcoin, right? It's like you push into the 786, you lose this level. I'm probably looking for the bigger drop down towards 1647 to 1587. Same situation as yesterday. No real update there. And again, just like Bitcoin, right, you could be in a situation where you start to form those bullish divergences. Uh, 65, 750 rejection, calling it now. Shout out to Dare. 69, 750. Think we're going to wick that high? SFP it, send it down. Is that what you're talking about? A little sweep work. Send it back down. I'd like that. As a matter of fact, I would just love to just nuke so I could take some more profit on my shorts. I have been very tempted to just close them. I'm up pretty big on my shorts. Shout out to Crypto King. Said crypto is dead. Go home to your families. Console your families. It would only cost you $8K max. Average cost $5K. Do it. Shout out to get financial certified as a financial advisor. How long does it take? I don't really have a lot of time. I don't have. Is it like an online course? I honestly, if I took a financial advisor course, I hope it's hard. I hope they don't just hand this stuff out. It would make me feel gross inside. Shout out to Mr. Market said, jokes on you, Crypto King. They left us all a long time ago. The families gave up on us, guys. Not on us. We make money on the way down. Mrs. Candles always laughs. She's like, oh, my God, crypto's going down. Are we making a lot of money again? Oh, man. Learn how to short the market, guys. Do you trade commodities? No, not really. Should. Maybe we'll do like a series where I just trade something I never trade. Or just like trading like obscure things. There's some like weird things that you can trade. It's the toughest test I've taken. Shout out to Gary C. That makes me feel really good. That I like that that's the case. Well, they let me bring the crayons in that I eat because I do like to eat crayons. So I don't know if I'm going to pass that test. What's up, New Earth Guardian in the chat? What is going on? Darren says, Frankie, need to join me scalping ES. Maybe we will. Maybe I'll start getting into that. It would also broaden our horizons out of crypto. I mean, it's all just candles on a chart. It doesn't matter what you're trading. Obviously, everything moves differently, like we talked about. Right? Like, obviously, this is much different than this, right? I'm used to the volatility in crypto, which is I love, right? Because, like, as a trader, you like the volatility. That's why I love Bitcoin. It's, of course, right, when it rips. But the volatility is what a trader likes because, again, you're making money whether price goes up or down, right? People need green. We need green. We make money on the red, too. So I love the volatility, right? Even, like, position holding your spot bags up, being able to short these like little moves up and down, right? Like I always say this is like my earned income, right? And then my long-term investments are my long-term investments. I separate those completely. Like it's funny, my mom, every time like Bitcoin's like in the news, it's going down, she's like, "Are you okay?" And like, "Is everything okay?" I'm like, "Mom, it's fine." I can sell too. But I separate that completely. I always recommend that. Like I always have like people in my personal life, they're like, "I bought a bunch of Bitcoin. It's up. I think I'm going to sell it and then buy back lower and then just ride the waves." And I'm like, with zero knowledge on how the market moves. And I'm like, I do not recommend that. If you want to do that, take a small amount of it and put it into another exchange and trade that by itself. And I've actually had like 2 or 3 people in my life not take that advice, do it anyway, and then come back to me and they were like, "Oh, you were right. You were right. I bought and then I didn't think it can go lower and then it went lower." And I'm like, yeah, you got to learn a little bit. Bitcoin pounds and alts did nothing. Yeah, shout out to Getchy. Welcome in, bro. Do you ever consider trading beaver pelts only in the live market? I'll go to like the local market and I'll just, I get my beaver pelts. I actually dye them like with cool designs and stuff, and I'll go and trade them for squirrel feces, which are actually going up right now. So if you guys buy squirrel feces, if you're holding squirrel feces right now, or if you don't, go in your backyard because it's skyrocketing, let me tell you. Talk about a bull run. Shout out to the Fed chair candle speech. Price go up. Bing bong. Just throwing money at the press people. Crypto phase trades. No, you can't actually trade beaver pelts. There's no way. What bull divs do we have now? Shout out to Dez. We put some bull divs into the 786 right here. I'm not going to draw the 786, but it's right here. We got some local bull divs. Lower time frame stuff, though. Again, what I want to see is that low taken out. Come on, baby. I don't think it's going to happen right this second, but, it might. Again, guys, like the market takes time to move sometimes. Sometimes it doesn't. But, it could take a little while, right? Let's just say we are going to come up towards that weekly MPOC that we covered, right? That bigger level of resistance. Where is it? Right here, right? POC also a really big level to look at. If we wind up coming back up here, this could take a while, right? And then eventually roll over. And then who knows how long it takes to come down. But when it comes to my overall plan, like long term, I would just love for these lows to get taken out eventually. And if they don't, right, we'll just look for the trades on the way back up. Even if that short up here ends up being a scalp, and then maybe we find a long, we ride it back up, 72,600, going to be the next major level I'm looking at, right? And again, like if you just look at this raw price action, right? Here's your major range high. Here's your major range low. Get up here, start playing around. Could come back down, right? You could just kind of trade this range. Fake out, come back up. Inside here, of course, you could trade these internal ranges, but when I'm looking for bigger trades, right, of course, we've taken scalps in here as well, but when it comes to the bigger trades, right, like I just really need those not only, bigger ranges to break, but I also need those bigger high time frame levels to get hit, right, preferably. Long beaver pelts. Pelt. That word is fun to say. Pelt. It's punchy. Pelt. Give me that pelt. Coffee made from lemur poop. It sucks. I would not. Who's drinking lemur poop coffee? That's crazy. I heard it has really good caffeine, though. What time frame do you recommend for day trading? 1, 5, 16 minute. I mean, there's a lot of preference in there. I would consider a day trade like it depends, right? Like I guess the traditional, I don't know, you could like Google the traditional definitions, right? But like a day trade for me, like typically when I'm, it also depends on the volatility, right? Like if you're going to be like scalp, I would consider like 1 5 minute scalping, right? Yeah, I mean, this is number one. I would recommend if you don't have full time on the charts, I wouldn't even recommend scalping, right? If you have a full time job, unless you're just going to be, I mean, even trading on the weekends, I wouldn't even recommend really, it's because it's low volume. But I would consider like 1 minute, 5 minutes scalping, like even 15 minute, like maybe 15 minutes, you can catch like a nice day trade, right? Like let's just, for example, say you're waiting to come down to the 786, right? You get the bull divs. Right, you're in the long, right? How long has this been? 8:15 to 3:30, right? Like maybe you just wanted to ride this into your local fib, right? Maybe that's your thought process, right? You got a nice entry here. Maybe you took the SFP. Maybe you took it off the bull divs, right? You get a nice little 3% move. You open it, you close it, you walk away for the day, right? Now, like on a $100,000 position size, that's $3,000. Right? So you make a quick $3,000, walk away, right? Most people won't do that. Most people will, not have a plan. They'll just be like, I'm going to hold this forever, right? I wouldn't have a problem holding that. If you take some profits, move your stop loss to break even, that's a different story. But most people will be like, I made $3,000. Now I'm going to short it, right? Oh my God, it's continuing up. I lost. Oh, now let me long. Then it comes down. Oh, I lost. Before you know it, your profit's gone for the day. But yeah, I would say like 15 minute for day trades, maybe. And then I would consider like 5 and it's different, right? Because like even for like a multi-day swing, maybe like a short-term swing trade, like a 3-day swing trade or something like that, you just don't know how long the trade's going to take to play out, right? Like maybe you enter this trade, right, thinking it's going to be a day trade, and then price goes sideways, it comes up, it comes down, right? 2 days pass, and then eventually you wick up, right? Now that idea of a day trade ends up taking multiple days. But yeah, I would say like 1 minute, 5 minute scalping, 15 minute, you can catch some nice day trades. And then like 4-hour entries could be looked at as more of like swing trades. But again, when you ask yourself, everybody wants the day trade. Everybody wants the scalp. They want the high intensity, click buy, click sell. I want to get in the game. That's what they start with, right? I would not recommend starting there, to be honest. Like, if you have a full-time job, you're going to have a really hard time scalping the 5 minute. Unless your full-time job is like sitting there as like a security guard, like I always say, right? You're like sitting there for 8 hours. You don't really talk to anybody. You're kind of just sitting there like watching security cameras waiting for something to happen. Well, then, I wouldn't even say jump on the 5 minutes and start trading. I would say spend 3 months just studying before you even try to open a trade. Learn a strategy. Learn how to plan your trades. Learn how to find key levels. Learn how to read the market before you even get into trying to execute trades. Then once you understand that, you've done about 20% of the work. Right? You've gone through the TA. You've learned how to find key levels. You understand how to find setups. I would say it's about 20% of the work. Then you could start maybe demo trading or starting with a small account. And then the real work begins, which is understanding that trading is much harder than just understanding where price is going to bounce. Right? You could be an amazing technical analyst and a terrible trader. Right? You could say, for example, I could say, hey, high probability of a dump here. I'm going to short this. Right? And then if price comes down, and I don't take any profits, right? And then we start bouncing massively. I'm like, it's just going to go back down. It's just going to go back down. Then I close it at a loss. It's like, well, sure, you were very accurate on the rejection, but your trade management was terrible, right? Trade management, execution, all this stuff are skills you have to learn. And again, like I would recommend if you think, if someone says that to you, like, hey, take 3 months to start learning and then maybe start demo trading, and then you start thinking to yourself, well, I'm not even going to like start making money for like 6 months or a year. Like trading is probably not for you, right? And I don't think a lot of people are honest about that online. Don't get into trading to get rich quick. Get into trading to get rich. Don't get into trading to get rich quick. That's the worst way to enter this market or this field. Trust me, I'm speaking from experience. So please learn from my mistakes. It'll make your journey a lot quicker than mine was. You could use the 30-minute as well, but a little bit slower. Yeah, I mean, it also just depends on like how fast the market moves, right? Even if you were looking at this on the 30-minute, right? Maybe you get the 30-minute. It looks like we're going to print a 30-minute bull div. Maybe you get a low time frame SFP, and then it plays out really fast. That could be a nice day trade. But again, sometimes price moves a lot slower, right? Maybe you see 13 hours, 16 hours, right? Like when price is just kind of wiggling sideways, sometimes you have to wait a lot longer for things to play out. But yeah, I always tell people, what type of trader should I be, Frank? Should I be a swing trader? Should I be a scalper? Should I be a day trader, right? I always kind of point people towards swing trading to start them off nice and slow, teach them patience in the beginning. But again, you have to ask yourself, like, what does your lifestyle allow you, right? Do you have a family? Do you have a full-time job? Do you have a lot of hobbies that you're not willing to sacrifice to replace that with learning how to trade and doing things that are not so fun? If so, that's totally fine, right? But you have to ask yourself that. You should already have a steady stream of disposable income before ever trading. Yeah, 100%. That makes it a lot easier, too, because you're, like, way more emotionally detached from the money. Never recommend, like, oh, should I quit my job and pursue trading full-time? Absolutely not. I would never recommend that to anybody. That is, like, starting you off on the worst foot possible. Because what is that going to do? It's going to increase your emotional attachment to that money. I got to make this money back. I'm down big. Sometimes people come in here and they're like, where's the next level? I need to make money really quick. Like, I just lost a bunch of money. I got to make it back. Whew, bad way to look at it. It's like the quickest way to wreck yourself. 100% don't do that. Yeah, 100%. Shout out to Perry, said I didn't take the trade from last week, and I feel like I have withdrawal symptoms. Yeah, shout out to Perry. Fight them, baby. The charts can be addicting. That's why I always tell them, like, that's why a lot of people, even like if they're good, right, like they'll make money and they'll just stay too long. The market, well, if you hang out too long, they'll kick you out of the club, bro. It's yeah, you have to know, right, that like you might not get your final TP. And looking back, like even on a higher time frame, right? Like it's a little easier to look at this from a higher time frame perspective. It's like a lot of people won't want to take profit here because they're thinking it's going to go up, they're going to make more. And you might be right? But looking in hindsight, if you can't take profit here because you think it's going to go higher, what makes you think you're going to want to take profit here? You're still going to think it's going to go higher, right? And then eventually when you're round tripping your bags and you're sitting down here, you're going to look back and be like, man, taking profit a little earlier wasn't really that bad. I would have rather had less profit than be back in the red on my bags, right? Or back at break even on my bags, whatever it is. And most people, they want to get into trading and make $1,000 a day, $5,000 a day. It's like you could have, if you set realistic goals, right? You could find $200 on the chart. I mean, depending on your position size and your account size, obviously. But like, I've had people want to start trading. They're like, yeah, like my goal is to make $5K a day. I'm giving myself 2 months to do it. And it's like, dude, slow down, man. Like, how did you make your job? And like, I make $50K. I'm like, why are you trying to make $5K a day? Like, just you can like limit your or lower your expectations a little bit in the beginning. Get consistent at making small money consistently over time, and then just scale the capital. Right? Then you can invest more of your money into your account. You can get a funded account, whatever it is. But prove to yourself that you can make small money consistently. It's just moving the decimal point, right? If you can turn $100 into $200, $100 into $150, whether it takes you a month, 2 months, 3 days, whatever it is, or if you do that consistently over time, you just up that capital, and then that $100 turning into $200. It's the same trades, the same risk management from turning $100,000 into $200,000. But if you make $50K a year, right? Like, you really only need to make, what, $200 a day? Did I do that math correctly? It's much less of a daunting mountain when you set those realistic goals. But 99% of people will just go, I want rich fast. And then they just never make it, right? This is why 98% of people fail, right? It's because 98% of people just want the easy way to get rich fast. And it's really easy to sell trading as that. You know, I didn't get to skip the hard part. I went through a hard part for years. I didn't get to skip that. No good trader gets to skip that, right? I talked to this in the premium Discord. Talked about this. You know, no one gets to skip that part, right? Like, I didn't get to skip it. No, like, every profitable trader went through the hard times. The difference is they corrected their mistakes, they learned, they started executing on a plan, and they stayed around. You know, trading is it's a weird situation because in trading, it can look like you're losing on paper when you're actually making progress, right? Like, sometimes you can have a really profitable system, and you could even follow your rules. Let's say you load up an account, you're at break even, right? You have 3 really good trade setups. You execute them perfectly. And those 3, remember, whatever the win rate of your strategy is it's not 100%. Right? So it might win more often than not, but it's going to lose sometimes. And sometimes it's going to lose multiple times in a row. So if you load up an account, you have a awesome strategy, right? A decent win rate. You could have 3 beautiful setups, get stopped out, even at a small loss in a row. Your P&L will look like this, right? And then you're going to look at this and be like, oh my God, I'm failing. This is bad. Now let me change my strategy. Right? But you have to stick through this. They're thinking, I'm not getting rich quick. This doesn't work. I thought I was just going to learn this strategy and get rich quick. That is not how it works, right? Over time, right, then you'll get a win, right? You're going to get paid more on your wins than your losses, hopefully, right? And then sometimes you're at like break even for a little while. Now you're like you're negative in your account, but then you have a week of maybe not a lot of trades, or maybe you just get stopped out at break even. It's a slow road. You have to stay in it long enough to see the discipline and the edge play out, right? Most people just quit when they think they're losing, right? But it doesn't necessarily mean you're losing. Now, maybe you're taking terrible trades. Maybe your risk management is horrible. Maybe you're just, you know, emotionally trading and wrecking your account. That's a different story, right? But like, this is actually a skill where you can actually be doing okay, but it looks like you're losing on paper, but you're really not. Why is this not losing? You're losing money. Frankie, this doesn't make sense. I'm in trading to make money. I'm losing money. How is that not failing? Well, it's because you're not going to get profitable instantly. You could have again, your strategy could be perfect. You could still have a bad week. That's where people get tripped up. It's the psychology. Again, you could have a bad strategy, you could have bad risk management, and that could also be the case, that the reason why you're losing. You have to be able to identify that. But why is this not bad? Well, are you sticking to your plan? If so, you're taking good trades. I said to the Discord yesterday, you want to don't judge your trades based off if they played out or stopped out. Let's just assume you have your strategy, you stick to your plan perfectly. If you lose a trade, and you had the legit setup, you didn't make a mistake technically, you had the beautiful setup, and the trade just didn't play out. Is that a bad trade or a good trade? Frankie, it's a bad trade because it didn't play out. No. It was a good trade because you had the setup, you hit your key level, you had the confluences, you had the entry trigger, and you followed your plan and good risk management. That is a good trade, whether it wins or loses. Because the next time that beautiful setup presents itself, over time, over 100 trades, it's going to play out more often than not. Not 100% of the time, 100 times in a row. But more over time, that is your edge, right? It's just a statistical probability that your trades are going to play out more often over time. But there are times where you're going to lose more in a row, and then there's going to be times where you're on a winning streak, right? And then you're going to be thinking, oh my God, now I'm on a losing streak. I was doing so good, now I'm on a losing streak, right? But higher lows and higher highs, right? That's why risk management is so important, and that's why sticking to your plan is so important. So don't judge your trade, right? Like, for example, my short from 98K. Is this a good trade because it's up a lot of money, both of these trades that I'm in on both exchanges? Is this good because I have $12,300 in unrealized profit? I mean, sure, that's awesome. But no, it was a good trade because I took it off technical confirmations and stuck to my plan. If I took this trade off those technical confirmations, those same technical confirmations, where am I? Right? If I took this, by the way, just real quick, we were looking for bearish divergences here, SFP of the high. Those were the entry confirmations. We also had massive key levels up here. Right? So I have my trap set up here. I see the entry confirmations I want to see. I have some confluence. That's enough for me to take the trade. There's no guarantee that this trade was going to come down and play like this. This was obviously the overall plan. But if this trade came up and stopped me out, was that a bad setup? No. This setup is going to play out more often than it won't. But it's not 100% of the time. So you would look at this. If this got stopped out, you'd say, wow, that was a bad trade. No, it was a good trade. It just didn't play out statistically. It's not going to play out 100% of the time. If this got stopped out and I got another setup with the exact same confirmations into a major key level, I'm taking that trade every single time because I know more often than not it will play out. And I also know that even if I take multiple losses in a row, the losses are smaller than the potential wins, right? Obviously, this one wound up like really swinging. So judge your losers by your execution and your plan, right? Not necessarily off your if it wins or it loses. You're going to take good trades that get stopped out. Anyway, that's sauce. That is literally what a lot of people won't tell you. They're just going to say, use my strategy. Wins every single time. Hopefully they don't say that. Yeah. Shout out to Oliver. Says, beginners ask, how much am I going to make? Professionals ask, how much can I lose? Protect the downside so your edge has time to play out. Couldn't have said it better myself. If you don't protect your downside, you're not going to live long enough to stay in the game, right? You have to preserve your capital to live to trade another day, right? Stick to the plan. Do not deviate. I will take profits later, higher, lower. Plan is the plan. Stick to it. And then whatever price does after that, it doesn't matter, right? If you take profit here, close your whole trade, and you're going to feel it. I still feel the emotions as well. If I took this long and I closed my trade here in full and it continued up, I'd be like, dang, I could have held that. But it doesn't matter. I made a bunch of money here. It's a repeatable process that I can find on the charts consistently. I'll be able to do that again, time and time and time again. And again, if you can make $200 a day, right, like it probably, honestly, not even with a big account, right, like you can make a good amount of money here, probably more than a full-time job. Trading is more addictive than Coke? Probably for a lot of people, especially for beginners. Shout out to Wahoo, said, I need more hours in the day for trading. I have no time. Help. Wahoo. Well, there you go. If you have no time, that would put you in a position of maybe you're trading, your style of trading being more of a position trader, right, or long-term investor, or a swing trader, right? Set your alerts at the major key levels, right? It might take a long time to get there, but when you get that alert, you can look for your confirmations, take the trade, set your risk, and then let that play out over a few days, right? You don't have to watch the 5-minute chart. If you don't have a lot of time and you want to scalp, that just is a conflict, right? There's no way to like scalp while also being super busy, in my opinion, at least successfully. It's like a nightmare waiting to happen. Shout out to Neon Visual. Said, use my strategy. Wrecked every time. Shout out to Neon Visual. And if you get wrecked, right, again, if this trade, right, doesn't play out, oops. If this trade doesn't play out, I don't know why this is changing colors. If this trade doesn't play out, you should not be getting wrecked if it doesn't play out. You should not be getting wrecked if it doesn't play out. Why? Because if you're getting wrecked, you're not managing the risk, right? That is, again, one of the most important things about trading. I say it's over win rate. It's honestly over strategy, too, in my opinion, right? Obviously, a good strategy is good, right? You want a good strategy. But if you're getting wrecked, right, what does that tell me? That tells me, I mean, I don't think Neon Visual is actually getting wrecked, but if you are actually getting wrecked, right, what does that tell me? You're probably not using good risk management, right? Or you just don't have a risk management plan. And that might just be because you don't understand, you don't know about it. You're just like, oh, I didn't even know that was a thing, right? And that's okay. It's a skill that you can learn. Shout out to Kodak, said win rate of 84%, tells me you have a low risk to reward ratio. How much is it? Or he's talking to somebody in the chat. An 84% win rate would be like one of the best win rates on earth. Again, like test it over enough time. Like even some of the best strategies don't even have that high of a win rate. You know, like if a trader ever tells you like their lifetime win rate is 90%, and they're not like globally renowned, the world's best trader, they're lying to you. Doesn't mean you can't have an 84% win rate over a certain period of time, but that would be just insane. 67% of the time it works every time. Shout out to Fox. That's right. Relying on trading for income constricts your time horizon, limiting you. Shout out to Mr. Market. Wow, a lot of you guys understand this for sure. Let's see. What happens if the U.S. invades Iran, though? Well, that would be a narrative. And to be honest, right, if I'm looking for another low to be made, it would kind of just be in line with what I'm looking for here on the charts, hopefully. Again, whether we get a bigger retracement or not. Same thing here, right? Like, I don't know. I guess, like, Bitcoin being in the files, if you know what I'm talking about. Maybe that was, like, a narrative or something. I don't know. I don't really look at it that way. But what was my bias here? Another capitulation coming, right? Whether we get a bigger retracement or not, looking for another low to come in. Whether this was fueled by some massive bearish narrative or not, like, this is what I was looking for either way. It'd be kind of the same thing. It's just weird. It would be like right on time, right? Right on time. But we'll see. We'll see. Oh, the win rate of my strategy is 84%, but I still get wrecked. Oh, shout out to Snee. Yeah, either the win rate isn't 84% or you just don't have any kind of risk management strategy. That'd be like the only way you could get wrecked on an 84% strategy, right? Let's just say an 80%. Let's just say it's 80% to make it easier, right? Right, and it's kind of just like math, right? One, two, three, four, 5, 6, 7, 8, 9, 10. Okay, so there's your 10 trades. With good risk management, if you have an 80% win rate, that's 1, 2, 3, 4, 5, 6, 7, 8. Loss. There's no way to get wrecked like that if that's the case, if it is a true 80% win rate, right? The only way, I mean, you could get wrecked doing this if these losers you just let run forever. Right? And you just get liquidated on them. So, yeah, I would say probably they're just, I don't know, either it's not actually an 84% win rate or, I don't know, maybe you have bad targets or something, but probably more of a risk management thing. Because if you get wrecked with good risk management, it's a grueling process, right? Because it's just like small loss, 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 right? It would just be like this forever, and it would take you so long to say that you're wrecked. Right, so if you, it would take you forever to experience that many losses in a row, and even if you were taking those small, like if your strategy at a 100% losing rate, if you're only risking 1% of your account, it would take you like forever to actually get to zero. So if you're getting wrecked, that to me oftentimes indicates that it's like you get into a trade and you lose all your money. Right, that's just no risk management. That's what I would say. Again, I don't know the details. Shout out to Mountain Adding said, use the motto for the movie Storks. Make a plan, stick to the plan, always deliver. Shout out to Mountain Magnets. Yeah, don't underestimate the how likely it is to have a sufficiently long losing streak, even with a high win rate. So risk allocation still very important, even with a good RR. Yeah. Win rate means nothing without profit factor being attractive. Yeah. Shout out to Richard. Frankie, my luck is that I am in Europe, and when you wake up and the New York is open, I'm already at home from working trading. So, I mean, you could trade another session. Obviously, New York is the most volatile, right? It has the most volume by far. But honestly, like a good amount of my trades are like multi-day swing trades, or like, I guess multi-day, I don't know. A lot of them start off as like day trades that wind up turning into swing trades. So I, really like to be there at the New York Open, right? Obviously, this is oftentimes where you'll get the pushes into your key levels, etc. But I wouldn't say that will really hold you back much, to be quite honest. There's the pullback. There's a little bit of a pullback here on the 3-minute. 64, 166. Yeah, shout out to Chad said, Frankie's such a nice guy. Everyone asking, is it possible to go here, then fail? I'll give the answer, Frankie. It's too nice. People, yes, everything is possible. Yeah. And it just goes to show, right, like what most people are looking for, right? They're just looking for, can you tell me what's going to happen, right? Well, I could tell you my plan and what I'm executing and how I'm able to make money. But most people are just like, yeah, but what if I come up to this level? Can I go down here? It's like, everything is possible, right? Can we reject here? Yes. Can we put in a higher low and bounce? Yes. Can that fail and go down? Yes. That's a prediction mindset, right? You need a probability mindset. And oftentimes, like in those situations, I am typically, right, like people will ask me down here, is it possible to bounce here? Yes, right? We do. I guess you do technically bounce, right? Am I interested in a massive long position here? Not necessarily, right? But people just want to get in, click the button. And hey, I mean, you could do that. We're all adults, right? You could do whatever you want. But again, for me personally, I like to wait for the high probability A+ setups. Great channel, bro. Shout out to Stavsu. Thank you, bro. Appreciate you. Don't forget to like and subscribe. Smash that like button. It's rough here in the crypto winter. Bart Simpson, why not? Shout out to yeah, you got a little Barty action there. If you guys don't know what a Bart pattern is, I guess a little Barty. Yeah, Bart. I try to find like a. There's your Bart. How do I view that, though? I view this more. I'll just use this example. I view this as just bearish divergences. Drop down. Obviously, this is the 5-minute. If you go, oh, man, I'm never going to be. Oh, there we are. Come on down, right? Bounce. Money flow comes out. Lower high, lower low, lower high, lower low. Bull divs. Money flow comes back up. Push back to the upside. But yeah, you got Bart patterns. You got Batman patterns. Oh, my God. But yeah, little Barty there. I was going to draw it on here, but this is kind of like a... There we go. Looking sharp. Yeah, it didn't move up that fast. Yeah, you kind of grind it up there. Kind of get the drooling bar pattern. Anyway. Let's see here. 1 hour red dot looking to print. So overall, guys, say the first kind of area, all right, again, this isn't going to give you a trade in the next 5 minutes, right? But to me, it's like people are like, but don't you feel bad if you miss this move then? No. I'm up like $25,000 in my unrealized profit on my shorts right now. I don't care about missing this little move. That maybe, sometimes I am interested in the moves, right? But like with these low confluence levels, right? Like even here, let me pull up this golden pocket again just to kind of show this. Golden pocket, nice. You get a little bit of a bounce, right? I don't anticipate that to be a massive move up, right? As we discussed on the live streams, right? So I'm not super interested in that level. Not even super interested in this level, even if it pushes up here, right? So for the shorts, biggest area of interest, still sitting here. Whoops. 67,613 to 68,855. Biggest area of interest to the downside between 59.8 at the value area low. Right, let me just see something here. Yeah, I do prefer, not from a probability standpoint. I just want this thing to nuke down. I'm not saying it can't go up. I just send it down, man. Rip the Band-Aid off. Kind of like when we were up here. Rip the Band-Aid off. We got what we wanted there. Maybe we don't get what we want here. But that's the next major area I'm interested in. To the upside, with the honorable mention of the value area low here and the local Fibonacci retracement at about 66.365. And then to the downside, guys, we lose this 786. There's nothing else underneath you, right? The only thing we had here was the golden pocket 786, which, of course, I've been very explicit about not being super interested in this, right? I really just would prefer to come down to the value area low. Come down there, right? I'm much more interested in higher time frame, bigger long positions. We got the backup support here between the weekly, monthly, MPOCs and the weekly horizontal. Just super. I mean, that's kind of why I've been sitting on these lower time frames, because they're just not. My plan remains the same, right? It's like people hate it because it just remains the same, and it's kind of boring, but boring here too. But that's where we get paid. So we'll see what happens. But that's really the big thing. If you take anything away from the live stream today, those are the big levels. Up here, down here. If we break out, right, $72,600 is the next big daily MPOC that I'm interested in. Shout out to M. Ducard, said bar patterns are the most subjective, useless pattern. Yeah, I just am not someone who really looks at patterns. You know, what I do a lot of the times when I mention a pattern is like, hey, I'm looking at this as a volume profile with money flow coming out. And then, like, from a pattern perspective, maybe you could look at it as a bear pennant, right? Like, I don't typically look at the patterns personally, right? And why not? Because a lot of people like to point out the patterns that, only the patterns that play out, right? Not the patterns that don't play out. So, yeah, I always bring back and again, right, like understanding context is very important, right? Like, hey, you have bullish consolidation here, right, which would maybe be viewed as a bull pennant, an ascending triangle, right? It is something I'll look at. I just don't trade based off of it, right? And I would say, hey, this looks like bullish consolidation. It's not what I'm looking at to anticipate the move, right? What I'm looking at is money flow or the order flow, right? If I saw this pennant forming and I saw a ton of longs entering in down here, right? And I saw a ton of liquidity sitting down here. I am more often than not going to look, even on a fake out. Sometimes what will happen is you'll sweep the highs. Oh my God, pennants breaking out. Everybody longs on the breakout, putting even more liquidity below the lows, and then price comes and sweeps those lows and then plays out. But you can only see that by looking at, understanding where the shorts and the longs are entering, not just by looking at the pattern. You're kind of just you're kind of flying blind in a way if you're just trading the patterns. And you don't have to combine it necessarily with order flow. You can combine it with an indicator or something like that. I just don't recommend trading them alone. So there you go. I don't know what the actual percentage hit rates are on the patterns, but again, you could be profitable trading patterns alone. Some people are. I just choose not to look at them because, I learned, it's like, oh my God, it's so easy. I could just find a pattern on the chart and make money, right? It's easy to sell, right? But in practice, it's you will eventually wind up, and again, it's not that I don't look at the patterns, I just incorporate other stuff now. Hey, love your channel. What is the name of the indicator for the money flow? This is Market Cipher. Technically, specifically Market Cipher B. They also have Market Cipher A, which gives you indicators on your candles. I do use Market Cipher B most of the time, though. You can check the link in the description if you want to save some money. Can you show us the weekly money flow again and how they line up with the tops and the bottoms? Of course I can. And again, even the stuff that I look at, right? Like even the weekly money flow, I'll go to the first crossover into the green there because every time money flow crosses into the green, whether it's a fake out or not, has indicated that the bottom is in. But even money flow, right? Like as someone who loves money flow, obviously, I would never, obviously there is a chance that these don't play out, right? But historically, they have a 100% hit rate. To start looking for bottoms to form, right? This is not typically where I say, hey, once you get the first big capitulation down, typically that is oftentimes where you start to look for the bottom. All right, I would never recommend just using this alone again, right? But again, like on the weekly, you're kind of looking at this as an area to be starting to get interested in dollar cost averaging into the market, right? So it's not going to help you snipe the exact low, right? What's going to help you there is hopefully some kind of bullish confirmation on your candlesticks and momentum, right? If not, maybe you get something like 2015 where you just get accumulation. But either way, right? Money flow crosses into the red, big capitulation down, accumulation, sign of strength, bull market, right? And again, you're not going to care, right? Or I wouldn't care if I bought here or my average entry price was here, right? Because I'm enjoying that move up. That's why when people say it's got to go to this level, right? Those are the people that miss it and wind up buying on the way up, right? That's not what you want to do. Weekly money flow crossover, big capitulation down. That did not mark the bottom. You made a new low. But again, there's your first big capitulation. If you dollar cost averaged in here, would have gotten in around $4,000 to $3,000 and enjoyed the rest of the bull market. Back here, money flow crosses over, big capitulation. At that point, it's time to start looking for a bottom, sign of strength, bull market. Weekly money flow crossover, big capitulation down. Time to start looking for a bottom, right? Even if you come down lower, right? In my opinion, this is why I'm interested in looking for bottoms to form. Whether it's in, whether it comes down here, whether we get another dip, right? And then I don't know how long this will take, right? But typically, that's what you would look at. Worked out perfectly last cycle. Not going to lie. When we first started the channel, we talked about this because I started my channel literally basically I started my channel coming on YouTube and telling people what they didn't want to hear. Of course, we wound up being right. But it's, winds up playing out perfectly, right? I mean, literally a 100% hit rate on that. At some point, eventually it won't play out. But even at this point, like, if the bottom is in and we kind of just bing bong around sideways, we start showing a sign of strength, we get above all the moving averages, and then eventually we go into another bull run, right? At this point, see the money flow come back into the green, right? Once that money flow crosses back into the green, probably marked that the bottom is in, it probably just will play out again. So, place to be interested in. Doesn't mean the bottom's in. Again, like showing in the past, right? The bottom was not in. People who are new, right, might just be like, oh my God, weekly money fell in the red. I bought, right? And then it goes down. They're like, oh my God, what the heck happened? I thought the bottom was in, right? You can't view it like that. I'll leave that there. Hey, shout out to Benjamin Cowan in the chat. What is going on, brother? Welcome in. What are you thinking, Ben? What are you thinking? Say classic case of the bear market blues. Yes, it is. I actually said this a few different times. I have some kind of weird romance with the bear markets. I don't know if it's because I started my channel on a bear market, or it's kind of just like, I don't know. We've just like, it's kind of like all the OGs kind of stick around, all the newbies leave. But shout out to Benjamin Cowan. Thanks for stopping by, bro. Hope you're doing well. What are you thinking, man? You think there's a case to bottom out above 30K? Or you think we're just going to follow the 4-year cycle? It's hard for me. I think both cases are obviously possible. The hopeful case, staying above 47K. Obviously, the traditional case, which would be crazy, right? Isn't it magical? The 4-year cycle. What do you think? Let us know. Usually we drop into February, small bounce in March, then lower into April and May. Dip into February, small bounce in March, then lower into May. So potentially, Let's get that 30K value area on the chart. Actually, let me pull this up over here. Let's kind of try to draw this out a little bit. So maybe if we do not take the lows, obviously I prefer to take out the low just from a technical perspective. But let's see. If we could take out this low, we got the support here. This would be my preferred case. Obviously, not going to be what we're guaranteed. Market gave us what we wanted here. That's why, sometimes you got to, count your blessings, right? I don't know. I don't want to. Sometimes the market doesn't want to give you what you want. Sometimes it does. I would say more often than not, it probably doesn't. But if we can get this daily bull div sooner than later, let's see. Obviously, I guess it doesn't have to be to the day. We still have some time left in February. If we can get that last little technical low in there, bounce in March, maybe that's where, depending on money flow for me, we can start looking for lower highs into the fib for the last drop down. Now, the question is, will we be able to hold the value area high in the POC, or are we going to have to go down for that 30K drop? Obviously, both cases are possible. Let's see. We'll screenshot it. Hopefully it plays out. Obviously, guys, you can't just draw lines on a chart and predict things. But that is that would line up with the February dip, unless the dip is over. In that case, if we're not going to take out that low, in my opinion, this 786 would have to hold. Which, I'll be honest, I would prefer, if I was going to look from a technical perspective, for the lower high and the lower low, I would prefer it. Yeah, I would say if we come up first before we lose this 786, that would play out perfectly. I think if we'll see. We'll see. But another thing I will say here, guys, is, man, if we bottomed out, even at 47K, shout out to Ben Cowan. He might be able to relate to this. That'd be if we bottomed out here, this would be the biggest cakewalk bear market ever. This wouldn't even really feel like a bear market for me. Even if we went to 47K, not super, super brutal, right? That would be a very, very, in my opinion, maybe I'm jaded just because I've been through 2 bear markets now. Or this is my 3rd one. This would just I don't know. It's whatever. Right? It's not that bad. But 30K, this would obviously. 4-year cycle repeats historically, perfectly. This does make a lot of sense with the diminished returns, right? It was 77% here. Obviously every bear market gets less explosive, or every bull market less explosive percentage-wise, every bear market less explosive loss-wise. This would kind of be the perfect percentage, in my opinion, if we're going to see it kind of diminish the same way. 75%. This would just be, just as brutal as the last ones. But we'll see. 47K. We lose that, I am 100% anticipating around 30K. 37 to 30K. But let's see. BTC usually bottoms below the balanced price, which is currently around 40K. Shout out to Into the Cryptoverse, or Ben Cowan. That's just trying to see from a volume perspective. Keep deleting these profiles by accident. Got the 47K POC. This, to me, indicates, you can't reclaim this. This indicates to me value area low is very likely. But if let's just say we bottom out 40K, which, of course, I think everybody knows that doesn't have to be to the dollar, right? But if this is the realized price. Shout out to Ben Cowan. I actually like this because this is not really stuff that I pay as much attention to, but it is interesting to see how this lines up with the technicals that I look at. 40K is the realized price. Monthly naked point of control, which is a huge level, around 37K. I'm going to have to re-pull this fib because I think this was the actual low. Not going to move it very much. Right, and this is what we talked about in the beginning of the stream. golden pocket, 786, right? The 786, as we looked at before, has been the exact area Bitcoin has bottomed in the past. All right, so whatever happens up here, right? We lose that 47K POC. There's your 786. Every other cycle, get that 786 bottom. 786 bottom. Lost it a little bit there, but got the reclaim. And then again, right, like no information here, but we just pull it from the low to the high. 786 bottom. That would be like picture perfect. And to be honest, like the way that this 4-year cycle has played out so far, like so similar to 2021, so similar with the 4-year cycle, timing-wise, it's like, it's kind of hard to not think that there's a super high probability it plays out exactly the same. Man. So that does bring you right around that realized price with the backup support on that 37K POC. It's actually funny. We literally just looked at that. And I haven't really talked about that level because we're kind of focused up here first. Interesting. Shout out to Ben Cowan, giving us some confluence. I love it. Yep. Oh, balance price is 39K and dropping. So who knows where it will be by the time we get there. Yeah. Well, shout out to Ben. Just to kind of give a view, right? Actually, it's really, I mean, it is just wild, right? That lines up perfectly with that 786. This is why I love the charts. It's like, I don't know. It's so interesting to me. But the way I kind of view the market, right, from a volume perspective, just very simply, is I'll take off the golden pocket, right? For me, once we get back below this value area high and get accepted back into this fair value, it's almost the same thing as like when we bottomed out in the bear market. This 30K level was the big level that I was looking at, on top of the money flow crossing into the green, which is a big signal for me as well, being that the bottom is in, on top of the bullish divergences, of course. And timing, too, which is wild. But this was the big level. I had a video on the channel talking about break above this level, you know, extremely high probability that we get back into value and rotate back to the POC. This was right where we had the ETF news, little pullback, which is exactly what we expected the POC, but eventually for the fulfill of the volume profile. So I would essentially expect almost the exact same thing here, get accepted back into the range. If we cannot hold the POC as a higher low and we lose that, typically we see these rotate back down to the value area low, which currently sits at about 30K. So if the balance price moves down there, that would line up as well. And of course, right, very speculative stuff here. But losing this POC would make me, I much more like to see the point of control hold for a bounce back to, you know, out. Once I lose the POC, the probabilities here statistically are so high that you get to the value area low that 786 becomes a little bit less interesting to me. But of course, we did lose it slightly in 2022. Very interesting. It's interesting to see that realized price lines up with that 786, though. We shall see. We shall see. But shout out to Ben Cowan. Thanks for bringing that stuff up, bro. And thanks for hanging out. I appreciate you, brother. Now I'm going to go watch one of his videos. Shout out to Ben Cowan. We should try to get him on the channel. We got to get a new setup here. I'm going to try to switch my streaming software so we can more easily get people on the show. But shout out to Ben. If you'd be down, once we get that set up, I'd love to hear your take on it. Because you look at a lot of that stuff like realized price, balance price, a lot of the stuff that I don't really pay as much attention to. So it's interesting to see how that lines up with the technicals. Shout out to Coin Hoover said, looking a bit bleak, Frankie. I'm heading on gold right now. Shout out to Coin Hoover. We could try to take a look at gold in a second. Most hated rally coming, possibly time to 80K or something. Shout out to Maz. Yeah, I think people forget that max pain. I think people always kind of default to the idea of more downside. In my opinion, I actually argue that max pain is oftentimes to the upside and almost more painful than more downside. And why is that, right? Because like people might feel like they missed the bottom. And here's the thing, though, max pain to the upside is kind of like a double whammy, because this is where people might feel, right? Shout out to Ben. Maybe it's if what he's looking at ends up playing out, right, where we do get a big rally into 70 to 80K, right, which would be right into the golden pocket 786 into this zone. People are feeling, right, a lot of people thinking, oh my God, it's finally a bear market. We're going down much lower. Then this is a hated rally, absolutely, right? And then what if, right, you get that rally into the golden pocket 786 for a lower high and a lower low. People are FOMOing into the market and then just absolutely dump them. Max pain, oh my God, I missed the bottom. Bye, 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 bye. Crush them. That's the one thing. It's like from a sentiment perspective, I feel like interest is really low in crypto, but I just don't know if we're like in the depression phase yet. Like obviously people aren't happy down here, but I don't know. That's like the one thing where it's like there wasn't massive euphoria at the top. I don't know. Maybe you don't get super, I don't know. Maybe that helps the low be a little bit less aggressive, but it's like, I don't know. I just don't feel like, I feel like the comments of Bitcoin crypto being dead forever are far and few between right now. They're starting to show up. But if you remember back to this bear market, it's like you got people like there's real reasons, right? Like Terra Luna collapse, FTX collapse, crypto's dead. Oh my God. Like super, super depression. It's like, oh my God, this is terrible. This is super boring. This is the worst thing ever. I can't even see how this recovers. I feel like we just don't have that. When you look at the psychology of the markets, I just don't know if this is depression just yet. Just a thought. Shout out to Panda the Prophet said, as long as we hold the support, I'm not worried at all. Let's see. The percentage of drawdown, I think it was like, I just went over this in the beginning of the stream. I think it was like 88%, 86%, 77%. I guess I can't just be guessing here now, right? Like roughly, yeah, like this was about 88% if you actually pull it wick to wick. This was, I think, 86, 87. Yeah, I think this was like 86, and then this was 77. So it is interesting, right? Because like then like 70-ish% pullback definitely makes sense. Definitely makes sense. And again, it's hard for me to kind of take that out of the cards without bullish confirmation into those major key levels of support, right? So at the end of the day, right, if this bull div formed on a 60% correction or 66% correction, I would just be inclined, like if I saw the technical signals there, I'd be inclined to say, like, I think the bottom is in. We obviously didn't have those, and it wound up being, lining up perfectly with the 4-year cycles, right? If you want to see the 4-year cycle repeat almost exactly how they have in the past, I mean, I would be paying attention just from a simple perspective, right? You would expect the low to come in somewhere here, right? Anticipating potential deviations. Right. And then again, you could kind of bounce around there a little bit. Who knows how long it takes. But, if you just want to look at the 4-year cycle perspective, I mean, this is really the area you would be looking at. History oftentimes rhymes. Or history doesn't always repeat, but it oftentimes rhymes. In other words, we need more pain. Shout out to Nicholas. It's anybody's guess, but I will just say that it is something like down here in the bear market. I was just kind of like, this makes sense. Like when I was buying down here, I felt horrible, right? I was just like, this is everybody thinks it's dead. Sentiment is brutal. Twitter is so toxic. I'm sure Twitter's very toxic right now too, but like, it was just like I felt beaten down here. It's a little harder here, right? Because like I said, if we're going to bottom out, like even say we go down to like 55, 47K, it's like that's like not really, like that's a pretty cakewalk bear market, right? 60K? I mean, 60% instead of, 77? Is that what I said this was? Yeah. Like, Just feel like, especially, if you go 77% and more traditionally, and then like this is a 50% correction, that's like, I don't know. It's like hard for me to feel like everything is old. It's like I don't feel that same dread that I felt down here, which is like something I journal and think about, right? Or mentally journal. I'm not gonna try to sit up here and pretend that I still have my trading journal because I should journal more, but I haven't done it in a long time. But like just mentally, like I remember what this felt like, right? This was just absolute total dread. I felt stupid, like especially after FTX collapse. I was like, dang man, I might have been buying a little too early. And of course, I was dollar cost averaging. I would have continued to buy on the way down. But I don't know. I just don't feel that same dread here, especially with the small percentage drawdown. Shout out to BTS. Said CNBC said this is the longest losing streak since 2018. Shout out to BTS. I don't know what you mean by losing streak. Yeah, law of diminished returns. Yeah, shout out to Darren. The problem there is like the law of diminished returns would be acceptable here, of course, but it would also be acceptable at 30K, right? That would still be, and I would argue, right, like like 80, what was this, 86%? Yeah, so like this, I believe, let me get this tick to tick here. 84% to 77%. Yeah, I guess like percentage, yeah, it's a difficult one. It's a difficult one. But again, like even here, it was just a condition, right? It was like, hey, we have the bull divs, and this is why I say like I really do prefer a higher time frame actual bullish confirmation to pop up, because once you have that, it's like, okay, now we have a big confirmation that the bottom could be in. We have money flow coming back up, another confirmation. Timing-wise, it made sense. And also, then I'm saying, and from a diminished returns perspective, this makes sense, right? But here, it's like, I don't have the bull div yet. Maybe if we come down and put in a bigger, lower low, we get massive bullish divergences or something like that. If that happens, we can start to say like, hey, this is starting to look a little bit better. And then the diminished returns, hey, maybe that makes sense. Very hard to call. Shout out to Jimmy DeKnight. Says, Frankie, what time frame do you think shows the most accurate price direction for the short term for like a few hours? I don't really know exactly. I don't know really what that question means. There's no, I don't really know what that question means. I wouldn't say, what time frame do you think shows the most accurate price direction? I don't really classify like time frame as giving an accurate direction. It's not like, I mean, the lower down you go, the smaller the moves become, right? Like price action's fractal. So like you have a 1 minute bull div here, but a 1 minute bull div, even with money flow coming up, it's such a low time frame that like you wouldn't look at that as a massive signal, right? And then the higher up the time frames you go, the more significant those signals become, right? Like for the bear market of 2022, if I saw a 1 minute bull div, that would mean nothing to me, right? For the bottom being in, right? But a weekly bull div, this is what a weekly bull div can do, right? With money flow coming up. Which is obviously like hundreds of percents. A 1 minute bull div with money flow coming up. Let me see if I could find one real quick. A clean one. I'll even find like a nice money flow crossover. Like, yeah, this is not how the time frames would work. There's no time frame that would be more accurate. But I would say like the signals on a 1 minute are going to be much less significant, not less accurate, but less significant than a 5 minute. A 5 minute is going to be less significant than a 15 minute. A 15 minute is going to be less significant than a 2 hour. A 2 hour is going to be less significant than a daily. A daily is going to be less significant than a weekly. The higher up the time frames, the more significant the confirmations, right? Or like the signals. I wouldn't say like the 1 minute's more accurate than the 15 minute, or the 15 minutes more accurate than the 1 minute. So yeah, hopefully that makes sense. And then like the lower down the time frames you go, like the more choppy it will become, right? Like this 1 minute money flow is going to chop up and down a million times, whereas like a daily tends to be a little bit more smooth, right? You spend money flow in the green for like days, weeks, months, money flow in the red for days, weeks, months, right? You go to the weekly time frame, right? Your weekly money flow crossover into the green here pretty much lasts the entire bull market. Like on a 1 minute time frame, or like even like on a 4-hour time frame, right? Like this weekly money flow stays in the green for 826 days. The 1 minute's going to cross into the green and the red 50 bajillion times within that time frame. That makes sense, right? You would think of this as the lower down you go, the higher resolution view, the higher the resolution, right? So like when you look at this weekly candle, you only have one candle. If you go down to the daily, that weekly candle is multiple candles. If you go down to the 4-hour, that weekly candle is more candles, right? And I'm not trying to be accurate here. The 24-minute, the 15-minute, the 5-minute is going to have even more candles, right? So like that weekly candle, for example, on a 15-minute, right? Where are we at? We're at Tuesday. Let's go back to, just, right? Like that weekly candle looks like this, right? And then inside that weekly candle is all that price action on the 15-minute, if that makes sense. So I want to look at the time frames for accuracy, like 1 minute's more accurate. But I don't know if I fully understood that question. Thanks, Frankie. I think I worded it wrong in that question. Not accurate, but you answered my question. Yeah, you probably meant like what's more significant. Low time frame to high time. Like low time frame is less significant. Higher time frame would be more significant. Absolutely. I figured that's kind of what you meant. Save us, Frankie. Call Golden. Pump it. Golden, save us, bro. Save us. I think what was he saying? He wants 40K. So we might be in a... We might be in a little bit of, we might have to wait for Golden to save us because I don't think he's buying until lower. We're going to see, we going to see more goblins soon or what? Shout out to Neon Visual. Probably. Death Cross on the 3-day moving averages. I think that's what we were looking at yesterday. I know moving averages. I just don't use them. I actually have videos on the channel talking about death crosses. Death crosses are oftentimes, right, people look for death crosses to start a big move down, but oftentimes, like, a lot of it's an old video, but oftentimes, like, you'll see the death cross happen and, like, a majority of the move is already over, and you wind up getting either a relief bounce or a bounce on the actual death cross. So it's just not something I would look at as a signal. But I do believe that we did look at that yesterday. It's like about to happen. But again, I don't look at moving averages. I'm not saying you shouldn't look at moving averages or they don't work. But at the end of the day, right, whether you're looking at a moving average, whether you're looking at a fair value gap, whether you're looking at money flow, whatever it is, it's all the same information being displayed in different ways, right? So like right here, I don't know what the moving averages were saying, right? We were looking for the lower high and the capitulation down to this volume. We got it, right? I don't know if there was a moving average signal in here. Doesn't matter really. Doesn't mean the moving average isn't important to look at. But through what I look at, oftentimes, like people ask me this all the time, it's actually that specific question. Why don't you look at moving averages? And my answer is always the same. Every time there's a moving average crossover, right, or a death cross, which is probably where you're expecting a move down, like I'm already favoring a move to the downside, right? Not based off moving averages, but then every time someone asks me to pull them up, I'm like, oh, that makes sense. The moving averages are lining up. So you just kind of got to pick, right, what you want to look at. I like to keep my chart as clean as possible. So if I had moving averages on top of MPOCs, on top of the volume profiles and everything, Fibonacci retracements, it would just be a complete mess. I look at like bigger, higher time frame moving averages when they're important. But yeah, like, I mean, that death cross would just line up with what I'd be looking for anyway. So there you go. Moon cross on the 1 hour. Shout out to Lucia. Yeah, it's also a lag. It's also a lagging indicator, which I mean, most indicators are lagging by nature, but like people always say, like market, like any indicator you look at is basically lagging, right? Just by the nature of it. But when it comes to money flow, right? When I look at money flow, the thing I like about the money flow is obviously it would be lagging too, right? It's printing off of the price action that's printing live on the chart, right? So like I'm not going to get another movement on this momentum wave until another candle prints, right? So but the thing about the money flow, right, and the reason why we were able to anticipate that losing 108K would likely lead to the bear market was because we saw the money flow trending out over time, right? And maybe there was a death cross up there or something. I don't know. But you can see this. Money flow is trending out, right? Price is coming up as money flow is leaving. Price is coming up as momentum is leaving, right? That is a literal discrepancy between the momentum and the money on price action, right? So it's not that I would never trade money flow alone, right? But like when I see it confirmed on massive bearish divergences and then money flow is coming out over time, that's how you're able to see, hey, even before money flow crosses over, right? It's like, hey, we get the drop here, and then on this bounce, you're saying to yourself, what are the chances that this is going to go to a new all-time high? Well, obviously, if you watch the channel, very, very low. The higher probability scenario was to first get the drop down here towards about 90K, and then eventually the drop down here, right? Because when that money flow crosses over, you're going to be looking for lower highs and lower lows. So as you're getting this bounce, you can identify this as a lackluster bounce for a lower high and a lower low. And we actually we shorted up here at about 124K, and then caught that move down, right? Took some profits here and then held the rest because we knew this was very likely going to be a lower high for a lower low. So we held a portion of that. I actually think I closed a lot of this at 91K. And then we caught the shorts here at 98K, which I'm still holding down here, right? So that's why I like money flow, because although obviously it's lagging by nature, you can actually identify the trend on it, right? And the discrepancies between your price action, which is somewhat leading, right? Like this momentum wave is only going to confirm when this top confirms, right? But you could see the momentum is coming out over time as price action is coming up over time, giving you a leading indication that you're probably going to get a big correction. And then the money flow lets you know that that big correction, instead of being a pullback and a higher high, will very likely start the larger trend to the downside. It's literally how we called 126 being the top after we lose 108K, right? Because not only do you have the 2-day money flow coming out, you started to see the weekly money flow coming out. There's many things, right? And then, of course, there's the same thing in 2021, right? Weekly bearish divergence. Early indication that you're going to get a pullback. Money flow comes out. Early indication that the trend will continue down. You'd be much better off fading the highs for the continuation. So people will say, like, look at fair value gaps, right? And then the fair value gaps just line up with our value area low, golden pocket 786. So, yeah, we're all looking at the same information, just kind of through a different lens. You just kind of got to pick what works for you. What do you like to look at? If you like looking at moving averages, great. But if we pull up, let me see if I can pull up the death cross here. I think that's what we looked at yesterday on the 3-day. Was it the 3-day? Yeah, like this. But yeah, it's like you do have to be careful with them because like a lot of people look at these as on daily. Yeah, it's like there's your death cross. Rip, right? There's your death cross, bottoms in, right? So it is a little bit, you do have to be careful with that. But on the 3-day, you do have that, right? On the 3-day specifically, yeah, I mean, you get the death cross here. And then you get a push up. Come on. Of about 15%. Now, overall, it does continue down. So you wouldn't say that was like a useless indication. But you do just have to be a little bit careful as far as like entering based off that stuff. Death cross. This one wound up being pretty good. It's actually a little bit better on the 3-day than the daily, to be honest. But yeah, we looked at this yesterday. And we said the same thing. It kind of just lines up with kind of what I want to see, which is to come down to these higher time frame levels of support. Oh, the 3-week. Death cross on the 3-week. Oh, my God. Let's see. Not seeing it here. Oh, that's the weekly. 3-week. Yeah, we don't even I got to pull up Bitstamp chart. Don't see it here on the 3-week. I don't know if that was a joke. Let's see. Yeah, they're usually post the fact and moves played out already. Yeah, very often, at least on the daily. Does look a little better on the 3-day. It lost the 200 on the 3-day right there. Oh, well, it wouldn't be a death cross. But you did lose it. Let's see. I'm not going to read that one. Shout out to BTS that do you use leverage when you take longs or shorts? Yes. Yes, I do. I do not gamble with leverage, though. Two different things. Yeah, the big difference there would be that we would have never fallen that deeply below the previous all-time high. Yeah, we've talked about that as well. Shout out to Woozy, said 550, we're getting closer to the bottom. Definitely. But I will say, I mean, I always say this. I mean, maybe a lot of people probably missed this move to the downside. But again, guys, it's all candles are candles. Whether it's going up or going down, you can make cash money. Plain and simple. The bear market is essentially just another bull market as far as the trades. I did this yesterday. Invert the chart. Oh my God. Massive weekly bullish divergence. Holy cow. Whoops. Money flow coming back into the green. Bull market. Except you invert it. And it's bear divs with money flow coming out. Bear market. But what if there was a way to make money when price came down? Let's see. But yeah, guys, I think that's what I got for you. Not really too much going on here. Again, I went over the overall plan just a few minutes ago. Really do prefer to take out the lows here. But locally, if we do get a push up, continued from this 786 daily that we looked yesterday, biggest level of resistance sitting here between 67,613 and 68,855 with the honorable mention of the value area low at 66,370. That's what I'm looking at. But for me personally, I am short. I am chilling. And again, as mentioned in many of the other previous live streams, bounced, not super hype on this level, right? Just like I wasn't hype on this level, we got the bounce. Still not really super hype on this level. Doesn't mean it can't give us a bounce. I'm just, I got to stick to my plans here. And if we get a big bounce, no big deal. We'll find another entry somewhere else, whether it's a short for the move back down, or if we're looking for higher lows and higher highs, then we'll look for the longs. But other than that, I'm kind of just chilling, relaxing in the shorts and cashing in. Yeah. Shout out to Big Huggy, said price about to move as soon as the stream ends. Yeah, it literally happens every single time. It doesn't even matter what time we go live. You can go live at 1, 2, 12, doesn't matter. 5:45, doesn't matter. Price just loves to move. Shout out to Rob the Crypto Snob in the chat. What is going on, brother? Welcome in. Happy birthday, by the way. Guys, wish Rob the Crypto Snob a happy bear market birthday in the chat. Hope you're doing well, Rob. Welcome in. I know it's hard for you to make these earlier stream times, but we're happy to see you in here, brother. Oh, my God, still live, Frankie. Let's go. Shout out to the Godfather. Welcome back, brother. You missed a lot, bro. You missed a lot. You missed a ton. Actually, you did. Ben Cowan was here. We were chatting some stuff that I don't look at, lining up with some technicals. But you missed oh, my God. We went down 1.3%. Oh, my God. But shout out to the Godfather. Shout out to Darren Dusting, says these short streams are the best. Don't forget to like and subscribe. On the way out, Mad Love Mafia. Thank you for being here, Darren. Thank you for being here, Rob the Crypto Snob, Jesse, Tony D, and I think those were the mods that we had in here today. We had Jason Casper stop by as well. But, guys, thank you for tuning in. I I was going to go to the range today, but I don't know what time they close. So I don't know. I'd have to find something else to do. Mrs. Candles is going on a trip until the end of the week. She's coming back on Saturday. So I'm going to have to figure out a way to fill my time other than being live here for almost 3 hours. So I was going to go to the range, but of course, they probably close. Everything here closes at in the middle of the afternoon. Super annoying. New York isn't big on ranges, if you know what I'm saying. But if they did have one, there would be black lights in it, and it would be open till 3 in the morning. And there'd be house music playing. Do I recommend Hikinashi candles over regular candles for day trading? Shout out to Jeffrey. Yeah. It's really kind of preference. I used to look at Hikinashi candles a lot more. The one thing is Market Cipher B is designed for Hikinashi candles specifically. So that is kind of important to realize. But I usually use regular Japanese candles 99% of the time at this point. Just because Hikinashi candles show an average and then the Japanese candles show actual price. So I would say if you're day trading or scalping, probably a little bit better to look at Japanese candles to see the actual price. And then for long-term trends, it's a little better to look at Hikinashi candles only because it smooths the move, right? There's not as many ups and down. It's kind of gross looking. On Hikinashi candles, you get kind of more of that smoothed out kind of view. But with all that being said, guys, I think that's all the time we got for today's live stream. I'm going to go see if the range is open and go hit some targets, baby. But that's all I got. Thank you for tuning in. Smash that like button and subscribe to the channel if you have not already. That's all I got. I'll see you guys tomorrow. Hasta pasta. Frankie Candles out. Bing bong.
Money dance, deposits hit. Charge print checks and we pop champagne quick. Money dance, wrist too lit. If the market move, we get paid off it. Money dance, bags advance. Private terminal, let us see stands. Cash in the safe, bank wires in hands. We don't pray for wins, we command the chance. Jet lounge quiet, warbling glass. iPad glowing, I'm watching the NASDAQ. Charge skill printing while boarding the flight. Volatility funding the life I design. Rich and Millie catching sun through the shade. Risk costs more than they salary made. They screaming pump, I'm fading the move. Then I short the top while they chasing the news. Money in the accounts, money in the safe. Money in motion, stacking by the day. If the candle shape, I don't feel a thing. I increase size when the fear hits the screen. We don't chase hype, we execute plays. We don't need luck, we operate with edge. They need green just to feel okay. I get paid when the structure breaks. Money bags, deposits hit. Charge print checks and we pop champagne quick. Money bags, wish too lit. If the market move, we get paid off feet. Money bags, bags of vast. Private terminal, leather seat stash. Cash in the safe, bank wires in hands. We don't pray for wins, we demand the task. Money bags when me alert go off. Wire clears before the jet takes off. My watch costs what they owe in debt. Drop it alerts, louder than flex. Fear hit charts, I increase size. Weak hands fold, I monetize, I don't guess. I position, luxury funded by precision. Cash sleep heavy in hidden safes. Numbers long in multiple states. Volatility pays my flights. Discipline built this life. Money dash, money dash. Money dash, 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 money dash.